So here you have the SPY and here's your Qs. You see, this is any difference that you have between two securities, okay, it's called spread. From here, from this high, okay, this is where the Qs closed yesterday. And then the SPY is at 572. So this is what, now if we go back, watch here, look at this pink line. Always stays above the SPY, right? Look, but this is what drives the market. There are some cases like you could see there is an underperform, like here we had this, yeah, this was the bear market. Okay. So this was the bear market we have that the almost what over 20% decline. Now you see like how everything like SPY and Qs move together, you know? So here you're gonna have those big names like Apple, Microsoft, and all those. Like, yeah, they're gonna, when tech sells off, it's gonna sell off hard, right? It's the same thing here. Like you see from here, even this decline that we had, it's not gonna let me do this. This decline that we had for like almost 10%, right? And look right there. It's not like the Qs didn't decline with it. It did, but it always managed to stay above SPY, right? Because it's a high beta ETF. Here we go. Something is off, you know? I don't know what it is, but this, now the thing is this, that if Qs will push, it will push the SPY higher as well, right? So the point is like the gap that we said this. So the the Qs there, which are almost a little over 3% from an all-time high, and here you have a SPY is like, you see all these highs right there. It's just literally stopping right there. Basically, it's not, you know. Um, this price action looks very similar to this one. I don't know. I'm waiting and just gotta be a little bit cautious, you know. That's what they call the reaccumulation. Look at this. I think I did this thing on the chart yesterday as well. This price action right there and this price action right there looks very similar. What happened here? There is a chance that it can happen here again. Okay. I understand that when you have the initial push, price goes sideways and then it resumes trend back again, right? So I'm watching. I mean, I know it was, what do we have? 3, 6, 7, 8, 9, 9 here. 3, 6, 7, 8, 9, 10, like 9, 10. Yeah, we're close. Okay, this thing is close. So I'm a little bit cautious because daily swings are down. I mean, I understand. I mean, you'll need 2 more days by Tuesday. If we will make 2 new highs, then the swing will turn back up. That would give me, then I can open more upside. This is why I said yesterday, it's like, I'm not gonna open upside on the wave count if I don't, if the swings are down, you know? So this is what I was talking about, is like this spread right there. How SPY managed to outperform the Qs, I just don't get it. Yesterday, Apple was dead, Microsoft was dead, I mean, there were so many stocks here didn't even really move yesterday. Even the fact that some of them, like if you look at the Mag 7, the only stock that is early moving, making new highs is Meta and Google and Netflix. Nvidia is not. Nvidia is sideways for like 3 months now. It's just dancing around into that 120 range. It's not going anywhere. It goes down 115, goes to 120, goes to 125, and just sits there. Microsoft is, yeah, it's taken a leg lower. Then you have Apple pulls back. Um, Amazon is trying to make a comeback, but it's still is down. Tesla is Tesla. Nobody knows this stock. So, well, I guess we're just gonna keep watching and see 2022 right there. There's a 2022. Find a period with SPY outperform. I mean, in this case right there, it did right there. You see, like Q's had more because you have to look at this way because of this bear market, we had a 27% decline on a SPY, but we have a 30 something, 37% decline on Q's. There, I mean, I can go far back. I mean, here's your two crashes. That's your dot-com bubble right there. No, no. Well, you have to look at this way, okay? In order to find weakness, to make a bear case in a market, you need to find weakness in tech, okay? When tech rolls over, it's gonna take S&P with it. This is the fact. But everybody I want to understand, like large cap is what we track. Or everything get measured by your large cap index, which is S&P 500. But in order to make a bear case, you need to make a bear case on Qs. S&P will follow it. This is what most people don't understand, that S&P will not just gonna crack on his own. You need to shake the big mega cap companies. That will pressure the tech. Tech is gonna come under pressure. That will roll S&P with it. That's how it works. Everybody who's trying to pick tops on S&P, it's ridiculous. I mean, it doesn't make any sense because you have values, okay, which is your diamonds, like the Dow Jones. It has a lot of um, companies that could add, you know, that could push S&P as well. I think this is what I can only, the only thing what I, we talked about this thing before. Everything here, this week, I know I watch everything this week right there. Because you can match these bars side by side. Okay, that tells you everything. Remember, we trade what we see, not what we think. This week, right there, these bars gonna match. Okay, you see this lower bar, higher bar, higher bar. You see what this week what we did? S&P made a new high, meaning it made a higher bar. Q's made a lower bar. Look, this bar matches, and then we go up, green, 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 green. And this, you see, it's gonna match. I know it because this is what I watch every day. These bars has to match side by side, meaning that the S&P is gonna put a lower bar, like the tech is gonna put a lower bar, S&P is gonna put a lower bar as well for the day. this is what I'm looking at this as a weekly time frame. Weekly is always going to give you a much better view. This week right there, okay, from 564 to 555, this week is where as Q's did manage to push up right there where they managed to close, but this is where the spread was is the for that, for the 3% that you're looking at, because the rest of the bars you can match them. You see the same thing where we just had the week lower bar, lower bar. It's not like, I mean, when one or two of these weekly bars is not gonna match, you will know right away there is a spread is getting like two securities. You would compare whatever stock you wanted to compare with S&P 500 or whatever. You can do it that way. It will tell you this, like, okay, one security is outperforming the other one. So this week, that's what happened. But anyways, that is one. Well, there's nothing we can do. Um, the point is that these bars has to match. That's all. Um, what we can make, I mean, daily here. There's a dumpster right there. Doji, I believe. Well, this is considered a bullish reversal. I'm something new that I don't know much, but I'm kind of learning. Like it colors them. Then I always kind of like look what the bullish continuation pattern is blue. I haven't even seen those ones. I only see those green and the yellow one, the doji, which is this one right there. The bearish reversal actually occurs right there on the red bar, on the red color right there. And then if it actually, when the day ends, so if it shows the bearish reversal, it will be red when the day ends. And then the next day, it I see a lot of time is the next day goes down, you know? So that's what it just takes, that candle right there, and it's just looking at these patterns side by side. Like this one right there is the bullish reversal color, which is the green one. You see the next day market popped. This one was the same sign right there with the green, but the next day was the inside day. So this is whatever doji down, higher bar yesterday. Looks like some sort of a hammer right there. It's so there's so many of these. I can't keep up with these candlestick patterns. They're like, it's crazy. But Optima has this, that it kind of narrow it filters all these candles. But again, I mean, nobody can predict the next candle. I wish that was the case, you know. I mean, looking at the wave count, and then we'll do the option thing. I mean, bigger picture is good. I mean, it's a massive rising, channel um, to the upside. I mean, the only thing now we just gotta have to focus on to see if we could just get these 5 waves to the upside. So the market has upside. I mean, if you like it, if you don't like it, I mean, it has upside, because right now, I mean, this is this is only a 3-way move, and this is just a 3-way move. And there is no fifth wave 5 can be a 3-way move. You need 5. So there is room, but I mean, this could take weeks, months to, for this wave count to play out. Yeah, it can. No, well, it can. Yeah, the wave 5 can be truncated, but you still need a 5 to make the truncation. This is just the 3. How are you gonna count this as a 5? It looks a 3. You need to go 3, then you're gonna come back down in 4, then you're gonna put your stop loss right, like wave count invalidation right there, and then you look for the 5th. That would complete a motive wave, because wave 5 is a motive wave, a trend wave. This is the correction. This is the one that goes against the trend, the counter trend. So yeah, wave 1, 1, 3, so basically what you're doing is you're just making higher highs, higher lows, all the way up. That's just the way it is. See, none of these lows are taken out. Higher high, higher low, higher high, and then whatever decline is going to be here, it has to stay above this. And then from there, higher high, higher low, that's just the sequence goes. And when you're going to start making the low, meaning to take out one of these previous lows, yeah, that's where you're going to have concern and the question mark. Yes, things going to get changed now. So bigger picture is good. I mean, you have to be mentally ready and to buy an expensive market. Well, you have no choice. This is why I always talk about it and been telling you, a lot of you guys, that you guys have to split your account into a 70-30, you know, um, divide this thing, do like 70-30 portfolio. You stay long 70% of the time, the market, and then you hedge with options with 30%. I think is the best way to trade. You could grow your account really good. Even the fact now, let's say you don't have an option trade open, right, to the upside or whatever, but you are long risk. So a news broke out, or if the market pops tomorrow, whatever, you got a bit of a higher open, of course, all the stocks will open, but you have 70% of your risk is to the upside. So all of your position is gonna be okay. But now if you swinging trades, you want to sell, you want to buy puts, you want to buy calls, you want to do spreads, you want to do butterflies, you want to do what, you can do all of that part into your 30% side. I think is the best way to grow a portfolio. I've been doing it for years, and I've been doing this year as well in front of you. I mean, it works. It works really good. You don't miss out on any upside. If you just wanted to sit and attack the upside and downside with the options, that's tough. That is tough to 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 open a trade one day and then thinking like, oh, it's gonna, they have to get to decide like, okay, should I do a swing trade? Could I swing a day trade? It just, that's that day-to-day trading for day or two or three, that's totally different. You just predicting how the market is going to open tomorrow and what market is going to be from 2 days from now. So your position and the time, basically your time decay, which is running on you every day. I mean, your premium is going to have enough juice left for to pay you something. So yeah, well, I mean, everybody's different, but I mean, again, I'm not a financial advisor, but I always tell you what I do. I mean, what works. I've been doing it for a long time, and I know what works. So I've tried it, and I think just because if you are afraid or have a fear like, oh, if market just kind of tops here, and if I'm in the option position, and if we take a leg lower, you know, I mean, yeah, I mean, you're gonna get hurt, and but at the same time, but look at the overall picture. What is so bearish about this? Nothing. Yes, we had these dips here, I mean, that stays and it was a bit painful, but everything is the reverse right back up. So all of these declines, like this high, all get taken out. See? Same thing. It's just the way the market. I am. Yeah, I'm gonna when the earnings season starts, I really don't throw too much of a risk, is because I just don't. First of all, I mean, you're putting risk on the board, and you know that in a week or two, that company is going to report earnings. So it is not a smart idea to open up a full scale position. I mean, what if you can get hurt? I mean, it's better to see what company has to say, what their earnings looks like, and what their guidance looks like, and then I mean, I'm always watching. I watch pretty much everything, but it doesn't mean that I have to trade everything. Yeah, I mean, we're gonna have we're gonna have some wild action this quarter. Keep that thing in mind. I mean, as I said, like next week CPI, and then we have the earnings season. Then all one by one, we're gonna go through all these earnings, and then the earnings, and what we have 30 some days left for election, and that night is gonna be wild. Election night. There's you future market, future future moves. I'll do the levels um on the a night before, the same day. I mean, I know whenever the polls close around like 7, 8 o'clock or whatever. But we'll do the levels on the ES, and then we'll see what is the upside and what is the downside. But future is gonna move. But the point is that if we do manage to complete this 5 waves here, according to this wave count, we will be due for a setback in a wave two. So there's gonna be a 3 wave correction that normally fell right down here to the prior 4th wave. That consider as your minimum. I mean, I don't know where the top is, and then I mean, you can run your fibs from here, but you don't know where to land yet. Like if I will just put it here at the very top, at the high end, which is 51.51, look, we're at 23.6 right there. That's what I just said. This is always, but you don't know how your first initial wave is going to look like, you know? Either it's going to be a 3, either it's going to be a zigzag, it's going to be as a 5. So you need a 5 down here, then you need another 3 push to the upside, and then you can measure more to it. Could take weeks and months for this thing. I mean, this is a much bigger time frame, Which wave for? No, wave. We don't know how this on the way down, yeah, because you don't know this side. The corrections are, you could have a flat, because the corrections are very subjective. Keep that thing in mind. It's not something just gonna give you a simple ABC, you get done, like, okay, yeah, keep buying. You could have a zigzag, A, B, C. Okay, this is a zigzag. Then you could have a flat, That's your flat. Your 3 down, 3 up, 5 down. Then you could have a complex. These are all corrections. So there's 3 down, 3 up, 3 down. So you have 3 type of corrections right there. Zigzag, flat, or a complex. That's it. It cannot have a larger wave 2, cannot have a triangle. Triangle only forms in wave 4. So which one is going to be in the world can give you that answer? I will have an idea when we will have the first initial decline, how it looks like. And then from there, we'll just play, play the 3-way bounce back up in a B wave that normally goes up to the, to a 50% of the initial drop move. And then from there, we can just measure this move and see where the 100% comes into a play, like, same equal distance. So, I mean, I'm talking like months out. That's this entire correction has to get confirmed with swings first before I'm going to make that case here. I'm not going to, there's no point for you to sit and predict, oh yeah, this is the top right there. And I'm just going to, well, you don't know your initial response, because if the price comes right back here, you need to get out of this channel first. Okay, and as you think you ready to break this first, you need weeks, like days and weeks of selling to take place in order to break this kind of a channel. When you have one larger degree completed like this, okay, 1, 2, 3, 4, 5, your wave 2 don't just stays within the channel, it has to come off. That's what the change of trend is. So thinking through scenarios, trying to be non-biased. Since August, we have been climbing wall over EQ is underperforming, just trying to prepare for all the outcomes. In this wave 5, we could have a one regular wave 5 like you showed, 2 truncated, which is rare. 3 extended blow off 5, you could have many times before us. I mean, the only thing here, okay, wave 5 can be a motive wave like this, meaning 1, 2, up and 3. I had a stack of fibs here, so one by one you could look at them. I mean, we already passed 53, 50. What is this? 56. Let me clean this thing up. You can see it. 56, 53. We cleared 56, 69. We cleared 57, 21. Now we're trying to press toward 51.11, 58.29, and 58.01. So this is a pretty thick zone as well. It's 161. We always have to keep an eye on 161. Okay, this is the golden ratio of Elliott wave. So those are always going to be your ideal targets. And then from there, if we keep pressing higher, meaning that we keep putting higher bars, then you look for 59, like one by one, these fibs gonna hit. I mean, so this is a motive way move, or the other way, wave 5 can be in an ending diagonal. You cannot say anything about that because this move here looks more directional. I mean, you have to be like sitting and hoping like you don't know how to, this is just like this. Like you just have to squeeze that price action into a wedge, like very tight. That's what the the ending diagonal is like. You have two converging lines that contracts the price. And then those ones see a very sharp reversal to the downside. Okay, because ending diagonal only forms in a fifth wave. Leading diagonal, which is this one right there, it only forms in wave one. See, like whatever the diagonal starts, your minimum downside always going to be your prior fourth wave and your second wave. Okay, you see how close this price came right to the second, but then managed to chop around for days right there, and then it just pushed right back up. So those are the more, I mean, the thing is this, they're very difficult to trade. Second, it takes a lot of time to complete. You know, I mean, you cannot say this is an ending diagonal, to be honest. You need to go up in three. You need to come back down in four. You need to overlap with 56, 51 high here. And then from here, you're going to look for another three-way move. That's how you're going to make the diagonal. I mean, this is a daily chart. I mean, you're talking weeks and months, and then the price has to just stay up. So to me, I mean, it looks motive. It looks, I think we're just going to complete 5 waves to the upside. Making a diagonal case is tough. I'm not going to just throw it out there just for entertainment purposes. Like, yeah, this is what it's going to be. I don't know that. I mean, you trade, what do you see? Um, Back to the 1 hour chart. I think I did this thing yesterday. I mean, it's not that much to do. I mean, we got this decline here. I mean, all I have is as a 1-2. Because we're taking the same. So we had this decline, which is this. Okay. And what we're trying to do is we're trying to count 5 within this 3. Okay, so this blue 3, this is the green here. I gotta change the color. It's right there. So the wave 3 right there, you need 5 smaller waves within that 3. Okay. Now I could open the upside, but at the same time, I really don't want to because I have 2 reasons for it. One is that we have no confirmation here. So I'm not gonna entertain the open up more upside. We're just in such a narrow, tight trading range. And once this, I'm okay with weekly. I'm totally fine with it. But looking at a 1 hour time frame based on this picture, it doesn't, I mean, there's no point for me to open any upside, and I'm not going to do that. This is why I left it like this, and I'm just like looking at, I just pointed this thing out before. Here we have this range. It's called a reaccumulation. It's the same thing here, right? It's a very tight, narrow trading range. So what we can do here is we can go up in 1, come down in 2. Okay, so the trend is clearly up. Okay, so you have the low here, you have a high, higher low, higher highs. Okay, so what we can do is I will just keep this thing in 1. Okay, I originally had 1 here, if you remember, and then I was looking at this as a 2. And then I'm like kind of like thinking and asking myself a question is are we ready to break into a third of a third? Those are monster runs. You know, if you a wave count that goes into the third wave of a third is gonna the price accelerates hard. You're gonna have a lot of acceleration gaps. Like market opens up with huge gaps, or you get a hardly any pullbacks. I don't see that yet, because I don't think market should be going crazy because if none of these earnings are out yet, I think we just gotta have to wait it out and see what these companies has to say about AI, all the money that they've been spending on, and what they have to say. Now, if we go back to seasonality, it looks pretty damn good. October looks good. I mean, the question is about September. Last month, everybody thought like the world is coming to an end. This is the worst week, month of the year. Well, look how it was. This is crazy. I mean, this run it's right there, 20% upside in what, 10 months? That's impressive. That's really impressive. I mean, here everything here down year to date, right in front of you. You cannot say that this is the top is in and we're about to wash out everything. You know, communication is just XLY 10, consumer staples. Okay, utilities. Oh my God. I don't know. I mean, Jesus, this one was a lot. I don't, utilities, a defensive sector is outperforming growth, mega growth. Think about it for a second. Look at this move, all in this Q3. I mean, then these numbers haven't started. It will show zero for 9 over in a Q4. It will adjust. I think I have the right date, I believe. Yeah. Oh no. No wonder why. It changed. There you go. Yeah, I had it as a November. Performance range, September 1st. Yeah. That's what I was thinking. Like, why this thing is zero? Okay, now it's good.
I'm gonna go eat breakfast.
I reset this one. She'll show zero. So we're kicking in Q4, but I mean, seasonality is pretty damn strong. If I have to make a case of that third of a third, yeah, we can. I mean, look at October. Then we can change this thing to November. Look at November. Then you look at December, take a pause. Then this is where the right after the Christmas at the Santa Claus rally. That's what everybody talks about. That doesn't start here. Keep that thing in mind. Santa Claus rally starts the next day when market opens after Christmas. That's what they call Santa Claus rally. Not before, it's after. A lot of people under the impression, yeah, buy December heavy because we have a Santa Claus, Santa Claus. Yeah, well, you gotta wait for Christmas first because there's no volume here. Anyways, if you're gonna start looking at your daily charts and all those weekly charts and stuff, the volume just dries out because people just start. It is the end of the year, so most of these hedge funds and stuff they just start taking time off. They're just gonna go and celebrate Christmas and stuff, and there's not that many people that actually trade here anyways, because you have a year coming to an end, and they got to close their books. You know, they see what they did for the year, and things like this. So I mean, the quarter is November is considered as one of the strongest month. Okay. Now the question is the the this year the the, the highest month we had, it was February right there. You can see the size of the bar. Then in May was a second. Then we have June, January, and August, and September was slightly a little bit low. So I mean, we're just sitting on a flat line right now. We just started the year month. I mean, there's nothing. What, 0.4%? No, sorry, I don't have the S&P. I don't have the S&P here. Gotta go to the other chart. So seasonality, I mean, it could play out and it's not going to play out either. So, it's only probability. There's no such thing. If seasonality has proven every single person wrong last month, I don't know. You can expect something opposite this month, because these market makers, you think they're watching, so everything that people are posting and all the news and stuff that are out there, they know. This is what I was kind of thinking the same way. I was like, if September is such a worst month that everybody is gonna go bearish, okay? It's like everybody's loaded up on ports. You think that they're just gonna hand it to you? Think about it for a second. Never crowded trades are the worst one to be in. That everybody is on one side. You should always think different. And trust me, it works most of the time. You don't want to be in that where all the noise is like, oh yeah, it's going to be the worst month, let's buy ports, everybody just staying hedged because I want to have ports this, but you have no confirmation. You have buy signal right on your face. You have an upswing, wave count is going up because you just buying ports. You're just trading everything opposite, just based on what, because everybody shifted on ports. Oh, gotta watch the screen. This is not what the screen is telling you. So no opinions. Trade what you see. Anyways, if we could do is 1, 2, 3, 4, it actually fits pretty good. Right at the 100% relationship of wave 2, 23.6% fib for this wave 4, which is ideal. It could be this or this, 38.2. So you have that zone right there. What I was watching, okay, the major support is 56.69, which is this high right there. Okay. Why is that? This is where you had the biggest percentage decline. Always have to pay attention to that. When you have the largest percentage decline from the top to the bottom, meaning peak to trough, okay, is going to become your major support. This is exactly right there. On Monday, I closed the ports. Right at the low right there. From here. I mean, it was a bit of a back and forth. So exactly what I closed it. The reason why I closed this one is because I was not getting that breakdown below this print. And I had a pretty strong feeling that it's going to hold. This is this support right there. If price reverse, it has to close below this print. Okay, 56.69. You can put a price alert or label this thing on your chart as well. You need to see an intraday close below this number, meaning a bar, like this is the 1 hour chart. On a daily bar, you need to you need to look at the bar, which has a open close below this print. You will have market's going to start, you're going to start seeing a little bit of pressure to the downside. So until then, we need to leave a bit of a room to the upside. That's all. Look how many times right there we're trying to press toward here. See? And then we just got the pop right back up. This drip right there of this 10 point, that lousy 10 point choppy market that we just had every day. I mean, this is this dip right there. I mean, what do you make out of this? First of all, 1.56%. What do you make out of it? Nothing. It's not a trend change. There's no point to buy any puts. You know? Look, there are two types of traders out there. One who are fighting the top, and they're saying like, "Oh, I called the top. Can I tell everyone that I called the top here last week? Oh, well, we had the trade. We didn't take out the high yet." But that's not the point. The point is like, what do you make out of this? Nothing. So either you sit every day trying to predict a top, thinking that this is the top, I'm going to buy puts, and this thing is about to roll over 5, 10, 15% from here. Or you simply wait for 5-way move with a 3-way response. Okay? You wait for 8 swings. If you do that, you have a much better odds of making money like this. If you just sit in here with you buying imports here, then I'm adding more here, I'm adding more here, you're destroying your account. You're just mentally exhausting. Like it's not the right way to trade. This is the dangerous way to trade the market. You don't know, nobody knows where the top is. I mean, I can show you many different ways how the wave count can go. I mean, what if this wave 1 comes here? This is all of 2. It's totally possible as well. This is what if this is this instead of 4, what if this is 2? We can make 1, 2, 3, 4, 5. Why, this is not a 5 wave? 1 here, 2 here, 3 here, 4 here, 5. Here's your 5-way move. Put 1 right there. Here's your 2. What if this is already a wave 2 and then we're ready to launch? I mean, there's nothing wrong with the wave count making it this way. See, this is the thing that Elliott is great until to a certain point, and then it gets really kind of little subjective, because I can make a 5-way move here. This is a complete 5-way move, and you have a 3-way to the downside. So what happens after that? You get another 5. What does the 3 tells you? You need another 5. So if the swing turns, meaning that we're gonna, like if there's gonna be a little bit more confirmation in the next couple of days or so, I have no choice to change the count like this. I just put 1 here. This blue is gonna come here. This blue wave 2 is gonna come here. But for now, I just wanted to see these two. What happens here if we do make a new high? Now you have to remember this, okay? We just started the new month. Okay? we put a price goes above 5767.37. As soon as we're gonna make that new high, means what? We're gonna have a higher monthly bar and we're gonna have a higher quarterly bar. That's it. So once you have a higher bar, that remains high for the entire month and for the entire quarter. Now the question is, where does it close? We don't know that because a long way to go. So the only thing it is that once you have a higher bar, it can only takes out the last quarter or the last month low to engulf. Okay. Those are that doesn't happen that often. But that's the only case you can make. I mean, if the price pushes here, which I will show you, and better to show you here. Here's your monthly. See, but this is a black bar. This one, this one, this one, this one, right? So for monthly bar to turn up, what do you need? You need 224.34 on IWM. That's the higher bar. Okay. We obviously need the highs here. This one will need Qs 493.70. And same thing with diamonds, need another new all-time high. But look where the market is sitting. If we don't take out these highs, okay, we either just, so I'll give you a range. It's way better this way. So you have this high, this low, here's your low, and here's your low. So you could either take a screenshot of this, okay, or you can just set up a price alert there. So one of these highs will taken out, okay, you have a higher bar. If the low gets taken out, you have a lower bar. And if you don't take out the highs and if you don't take out the lows, well, you chop around at the inside month for the whole month, which is one of these. See, no new high, new low, one of these. All these black bars are inside months. It doesn't have like this. This is the one gets more compared to the other ones. So the trend resume here. I mean, yeah, the last month, this one. See, on a weekly time frame, if you look at these bars side by side, they all match on SPY and Qs. It's just the smaller time frame is what the weekly time frame is what they create the spread that I've been that I'm talking about. But if you just match these colors, it just tell you same thing. You see right there, the red one, red, green, 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 green. Here's your dip. Here's your dip. Green higher bar last month, green higher bar next month. And you see, it's gonna work. I know it works side by side. So making a bear case here is more difficult, but you have to fight this one. You know, what I have seen and what I have noticed, and like overall, as much price I analyze as every single day, is you need to find weakness here. This will follow. Okay, the main driver of the market is this. These are all the passengers. So we'll see. I mean, it's fine. I'm gonna just leave it like this for now. I mean, again, I always have the case to change this thing into a 1-2, and then we'll see. I mean, for now, but we have our support here, major support here, 56.69. That was the low right there, and the upside is again 57.61. Sorry, 57.67. 100% right there of this move is at 57.74. It's literally right above the highs. And then 161.8 is 58.23, 78.6, which is going to be at 58.39. So this zone right there is where I think that this wave one will complete. Or if it's already completed here, then I have to change this thing here and then just open, more upside from there, which we can always do it. You will see how each session goes and how the wave con unfolds, There's always, I mean, I can always open more upside. That's not a problem for me. So RSI is pretty cooked. I mean, here. So we'll see. Use, let's see, I mean, where are we at? Yeah, 3.18%. I mean, I have it as a 1-2, for now. Yeah, 5 up, 3 down, diagonal 1 and A, whatever it is. 2. I mean, I'm looking to see if Q's managed to take out this 493, and then the all-time high is 503. So, I mean, if I can just take this thing off, and if you just simply take a measured move, you can do an expansion, take this low, take the swing here, project it from this low right there. Okay, so your equal distance, all this, we don't need this, is this 100%, 513. I mean, counting waves in between is, I'm gonna change this to black. So counting this thing in between, I mean, it's just how you put one here or however you want to do it. I mean, if you just want to play a measured move, take the low from here, which is, see this one down here. And then white is just like, I mean, I'm getting used to it. It's too damn white. I mean, look at this, all this. It looks nice though. It looks clean. Like I was just kind of bored of black. Everything just pitch dark. I'm like sitting here during the day. I feel like I'm sitting at nighttime. Everything is just black. Yeah, it brights up. So, I mean, simple measured move. This one down here, down to a 100% is right there, 513. So you can do it that way as well. You can just play a measured move. But you need to break 493 to get to, and then you have 499. So this zone right there is going to give us this confirmation to the upside. So if you're bullish, you should be, and you think that earnings will be good and and I can get more upside play, yeah, you can do a 495 and 550. Then you have to take these fibs I'm talking about a spread. You can make us, because you need swing trading with Elliott is really, really good, because I don't have these swings, these fibs on the swings though. Elliott gives me all these pullbacks, and so if you are bullish, I mean, 490, 493, 492, 490, you can just pick a 493 strike and just pick 493 strike and 513. That's your debit spread. And see if you can, if if you think that market is gonna go, that's the play to the upside. You know, you just play a measured move to a 100%. Um, just fibs are, I mean, it's all I trade. Here's a dumpster. I call a Wall Street dumpster. It has the most garbage stocks are all in here. And I think they did them on a purpose, just to move everything here. SMCI was the largest percent, the top leader, meaning it has the biggest market cap to the IWM and the top 10, and they just removed them. They just literally, the way they did with this rebalancing and stuff, every garbage company of Wall Street is an IWM now. Okay, all the good ones, they just pulled them out. And I don't remember now. I believe MSTR was an IWM as well, one of their top 10, not anymore. And SMCI did help this overall ETF, the Russell 2000, and they just removed that one as well. And then they did the split. Now the stock is back to $40. Yes. Well, I'm still long. It's good to have small cap and in a portfolio, and just keep trading other pairs at the same time. It's good, I mean, to fighting these individual stocks, which has horrible earnings. None of those companies makes any money. Buying small cap individual companies is just, that's a tough case. I'd rather just buy the entire ETF. Okay. And you just have every stock in it. It's just the way to do it. You want to sit and fight with one individual stock to see, like, yeah, I can pick a 50, 60, 70% move on this one. Yeah, that's that's different, but you need to see the actual index performance in order to make a case for those individual stocks. None of those stocks going to move much if your entire index is struggling to move. So it just what are you trying to do here? Man, you sending me charts in the middle of a session? What are you trying to do here? Are you making that diagonal case that I talked about? What was this? AB. Oh yeah, I mean 78.6. Yeah, it's almost right. Yeah. Well, we backed off here. If you take your fibs from the low right there, okay, all the way up here to the top, you just have to look for this 78.6, which is where you highlighted that thing. You see where prices, we backed off, and we just came right back up trying to retest that zone. Yeah, you need to break this one in order to get more upside. DIA, yeah, I mean, DIA is an all-time high anyway, so So the small, we'll get there in a second, then we'll do the option. I just want to go through the you know, the the S&P Qs and IWM and diamonds. See where we at. Um, Same wave one down, clean 5 waves up, 1, 2, 3, 4, 5. I had a case right there making as a 3. It's a look like a simple zigzag, a measured move of 100% to that 215. The problem with this is one, let me show you this. This is a on if I take a swing, okay, from this low right there because it has a failed swing, this is swing one. I had my finger crossed that this sucker is gonna just end right there, but this thing hasn't moved. We don't have a second swing yet. It will get tagged. Okay. Once it will have the second swing, I'm gonna swing some leaps on IWM for sure. And it's gonna be this is gonna be the stop loss right there. Okay. So it's gonna be a good play to the to the upside. But let me make this thing a bigger. The thing is, I have a full swing. I have my wave one. And then this right there, you see this line right there is all red. It was, I know I got a little bit of colors going on here. Make this thing bigger. Oops. Do I do this? Okay, here. You see this red line right there, right? It's still red because the swing is down. Once the swing turns up, it's gonna start turning green. Okay. So we have to wait for another day or two. I'm long IWM. This is why I always says you have to be long 70% of your portfolio and then you hedge with options. You have to wait. I mean, did IWM my share since last March went up yesterday? Of course it did. So you're not missing out on the upside because you have long exposure on your portfolio or into your account. But if you sit in and think like, oh, I missed this move because your mindset is like, oh, well, I wanted to get options, because that's the only way. Either you stay invested in a very long dated leaps if you don't have enough funds to put 10, 15, $20,000 into a position, you can buy a very long dated leaps. Okay. You can do those. And you can do, I will show you different ways as well. You can do diagonal leaps. Okay. I mean, you have no time decay if you do diagonal leaps. And you have long upside exposure on all the time. You're not missing out on anything because this thing is gonna rip. Okay, that's how again, as long as the swing is valid. Okay, I mean, this 1-2, I have to match this 1-2 with this. I have a 2 here for now, but I don't know what's going on here yet. We can just come right back down again to see what but as soon as if this 2 settles here, I don't know if it's gonna come down to 212 or it's gonna move, but this is what I'm gonna watch because this is the ATR, average true range number. So it measured the first decline and then just trying to see where that thing is gonna end. So once I will have a number 2, and then I will do this one right there and then I'll just play the break and I'll just buy some more leaps. That's what my plan is, but I'm just waiting. Okay. So this little move that we just had yesterday, yeah, I have shares. I got paid yesterday. I'm fine with it. So small account best way. If small account, yes. I mean, if you need to get a margin account, it's just I know you have to you have to apply for a margin. If they will take approximately a day or two to give you the approval, you get yourself a margin account. It's very important. Okay. You just having a smaller account. I mean, I understand. I mean, I don't judge nobody. You should be, if you are new to trading for the year to, if you are like only 2, 3 years into an option trading, you should be trading a smaller account. You don't need a massive 100, $200,000 account anyways, because if you don't have no clue about the market, why would you risk that much money to begin with? Okay. You have to prove yourself, you know, how much, how you can do on a smaller account. I mean, if you cannot grow a small account, what makes you think you're going to grow a large account? You know, what difference does it make? Because you're not happy taking $200, $300 profit because you want $2,000, $3,000 profit. Well, those will come. You need to size up those trades. The only way you're going to size up those trades when you have a bigger account. The percentage, is the same. It's just the dollar amount will get changed, right? A 10% is 10%. A 10% on a thousand on a 10,000 is 1,000. You know, a 10% on a 20,000 is 2,000. Oh, but sorry, whatever I'm just throwing out there. Remember my brain work on that. It's $400. So so 20,000, 10% for versus $200. I mean, yeah, that's extra too. But well, you know, it's tough to fight a small account. I get that, but you just again, I started small as well years ago. Nobody hand me, hey, go enjoy and trade how much you can. You just have to grow. Long dated leaps will help you, like a nice like a wave count or a swing or like something lines up right. You could have those, um and then at the same on and then at the same time you just trade what I trade basically, and just take a tape, trade by trade and see how we finish up the week and a month, and then it will grow. I'll grow your account. That's not a problem for me at all. I cannot guarantee you that, but I can grow every one of your account. Just trade what I trade. I mean, I'm not throwing out 10, 6, 7 trades every single day that say like, hey, I cannot trade this much because you're trading way too much every day. I'm not doing that. Yesterday I opened just one. I just really couldn't find thing. I mean, the other day I swing that Microsoft because it just came right to that fib price that I was watching and it instantly moved. But I don't, big opens are very hard to chase. If you would have a down open, yeah, you can find a lot of stocks that you could play the bounce to the upside. A playing a chasing a big open to the upside, and then you waiting for the price to come back down, and sometime it does, sometime it doesn't. Then you kind of hesitate, like, oh, should I buy it here? What if this thing is gonna pulse right back down because we just had such a big, huge open? Plus, it's Friday, everything's gonna expire. It's just too many ifs, too many. Rather just take it easy. If you Again, you have a 70% of your portfolio that is long, well, you got paid. So you didn't miss out the upside at all. It's just a matter of like you don't have the existing open new position that could benefit you, like, oh, you know, that we just had such a big open. I should have made this much money. Well, we'll made it next time. It's not the first or last big open that you ever gonna experience. There'll be thousands and thousands or more. So IWM is good. I mean, we just gotta have to give some time. Same thing. We can simply take a measured move, but I need that second swing to settle, and then I will see how we're gonna do. Either we do some leaps, um, or make it like a some sort of a spread or something, just to get some more upside. But we need to take out this high right there. First, we need to take out this high, 222, this one of this 5-way move, which is this 224. So we have this zone here first. This. This clears, then we can think like, yes, the upside will accelerate from here, because you have 5 up, 3 sideways, that would give us the move to the upside. If we just take these two, sorry, this move right there, the 100% measured move is at 236. So the 236 from the current price is 8% upside. That's a lot, that's huge. 8% on an ETF from here. I mean, that will push a lot of small caps as well. But I don't know if it's ready to go before earnings. That's the only question that we could, you know, um, so we'll see. I'm watching this IWM. Where is if I did that BIA update? Yeah, I gotta update this one. I haven't did this one in a couple days. I've been all chasing those 3. Chase, you know.
First, let me do
Yeah, somebody is asking me. Yeah, let me I think it's good. The daily time frame. Yeah, it's good. Move this thing out of the way. So this is because I changed the background to white. So all of these labels they used to pop on that black color in the back, and now everything is white, so they look all dull. Like it's kind of hard to see, but you can still see it. Um, it's the same. Here is your um, it's very similar to the S&P. Remember, we just looked at the S&P right there, here. So this is your bear market low, right? So we have 1, 2, 3, 4, and 5 going up in 5, right? So you take a same thing here, 1, 2, up in 3, 4, and you're looking for this 5 to the upside to complete 1. So it is exactly the same thing. Okay. So if that was your question, so it's the same thing. You cannot, the thing is this, that you cannot, well, first, once, if you're going to start going into these bigger time frame, is this where you're going to start seeing Elliott much better? And these indexes has to match. You cannot sit and think like, oh, this is a 1-2 here, and then the other ones are in a 3-4 to the up. You cannot do that. How you can make one index work completely opposite with the other 2 or 3? How you think that thing is going to work? First of all, it doesn't make any sense. Okay. So it's it's very important. You have to spend, if you do all this, I gotta change. I'm talking to you and changing this. If you have to like you have to um make sure that all of these indexes matches side by side. That will give you a much better view and to the overall market as well. Okay. So it's look, I mean, if you take this move, change like 3 years. So there's 3 versus 1 of this entire move off the low. So you have wave 1, down and 2, then you have a 5 smaller waves within that 3, right? So what does Elliott tells you? What is your ideal upside fib for 3 versus 1? 161.8. What was the high? 430. It doesn't mean it has to hit there. It could, but if you have more than 161.8, then you get to 200. Then 200 can go up to 261.8. Okay. That's how far this third wave can stretch to the upside. And if we take this, look where S&P come to, near the 261.8. This is where this market backed off. So if you have a third wave right there from your bear market low, this is your ideal third targets, 161, 200, and 261.8. Okay. There's going to be a fourth wave correction from there anyways. You're reaching right to the peak. So you can sit and draw whatever lines you want to draw that, and that is fine. But it doesn't mean that that the price has to hit this. That's trading is only probability. Targets are targets until they hit. Okay. There's a lot of time you're gonna miss it by like 3 points, and then just boom, there's the price reverse on you. I mean, these upside prints, they looks beautiful, but it's gonna take time to get there. Or we might don't get there. We don't know that. I can show you projections goes all the way up here. I mean, what is the point running that far, far out? I mean, just take it easy, you know? So, like, look at the low here. How can you beat a low like this? 4103, 4096. Look at the low on this one, 4953, 4964. He's amazing. Call it whatever, these are the fibs that you play to the upside, and you buy and buy the pullbacks. These are the ideal pullback entries to 3.6, 38.2, and 50. And then from there you look for price to make a move back up, because you have a higher high. What are you looking for now? Higher low. So the higher low can come in, but the only thing that Elliott comes into a play, Elliott tells you, instead of you being all ruthless, I'm gonna tell you where you're gonna be wrong. Elliott start putting a stop loss right there at the wave 1 high of the previous swing high. So the swing trading that some of you who wants to learn and things, you need to learn Elliott first. When you learn Elliott, swing is just a piece of cake for you. Okay. It's a piece of cake. This is how I got myself into a swing trading. I'm like start looking at these high these swings with when I got myself this optimized. I said this is like a piece of cake for me. It's nothing. This is hardcore stuff right there. This one takes time, but you got to put a lot of time in to learn all this to get better at it, and then if you don't want to do it, I'll do it for you. Just copy paste trades and just trade what I trade. Okay. Um, So that was the answer for the diamonds right there. It's the same thing. I have 1, 2, 1, 2, 3, 4, 5, up in 3, down in 4. What we're looking for now is to get 5 waves to the upside. So I have these projections up there one by one. So we went to 78.6 up to 100 to 127. So the next zone we have is what? 161.8, which is 432, 433, 434. That is a 5 versus 1 of 661.8. So the most important fibs are 127, especially 78.6 is the most important one. If you want to play the breakout, you need to break this 78.6 after every decline if you to play the upside. 78.6 to 100% to the prior high to look for a 127 extension. 616, what is that? 161.8, 1.618. Yeah. So if you take why this 127 is so damn because these you have to study. There are a few Fibonacci books out there. You have to, if you take 1.618, the square root of this is 127. Okay. This fib right there is what Elliott tells you is the golden ratio. Okay. The one of these. All these green ones. That's why I colored them green. These are all your ideal. This is for the extension. That's why it's orange. So once you break this, it's a 127 extension, which is right there. It's a square root of 161.8. Okay. So this, I don't know what else did I have open here. NVIDIA is good. We can still just crazy sideways chop. The high was what, 140? Low was 90. Rallied up, down, up. We could do is this. A, B, C, D. We're gonna hope on an 3, sorry, E to complete a triangle. If not, we can just slide this thing here. Okay. And if that will, this will give us the breakout to the upside. Okay. And we could just make another case here. There's no clear upside breakout on NVIDIA yet, so don't get too excited. 1, 2, 3 to complete this E wave. Okay. That could happen as well. It's just to complete the E wave, or is it already ended here? That'll be very, very small compared to the other ones, other two. So if this is not a triangle to begin with, we just get rid of all that stuff. We just take our simple move to the upside. That's why I have 2 and 1 instead of me making like multiple wave counts. I can just make one wave count. I can have both scenarios at the same time. So I will know exactly which one will end up playing out. I can just remove those labels. you know? So if it is a triangle, the path is to the upside. Why? Because triangles are only forms where? In wave 4. Nowhere else in a trend wave. So what comes after 4? 5, right? What is 5? It's a trend wave. It's a motive wave. So NVIDIA path is to the upside regardless how much it comes down. So that is a case one. Second is, instead of making a case of this triangle that we're talking about, this is a 1 hour chart. We just go with a 1, 2. We have a clear one to the upside, 5 wave up, 3 down. So if you have a high here, higher low, we have not made a higher high yet. Okay, because why? Because we need to break 131.26 to make a higher high. So how are we going to get there? Okay, so we have 2 right to this 61.8 between 78.6 as a pretty deep retracement, but it's okay. You don't know where 2 can stop. 2 can stop here, 50, 61.8, 78.6. But as long as it doesn't take out this low, that's what Elliott says, your counter trend move in a wave 2 need to stay above your where you start your wave count. So then from here we can count 5 up, some sort of a diagonal 1, 2, 5 up, 1, 2. So you have 1, 2. And then from here, from a 1, 2, you're going to count another 1, 2, because you want to get to this 3. So we can run multiple upside projections. You can have all these 100% is going to be you take one swing to another swing to another swing. Okay, let's start off with the big one. So the big one we will run from here. So where is the 100% of this? Right there, 146. Okay. So 146 is the initial swing from this low to this higher low to this. So that's 1. Okay. And then what do? You take this swing to this low. What is 100% of this? 135. That's your second swing. 1 from the bigger one, right? So that is your 1. And this is your 2, right? All you have to focus now is this, just to make sure your wave or your swing, whatever you want to say and call it, is needs to stay above the previous swing low, right? So you had a high here, higher low, higher high, higher low. See, you didn't break below here. You put your stop loss right there. If it goes against here, okay, it's not that huge. $9.816. It came down to, I mean, it's okay. You can live with it. I mean, it's what, 6, 7, 8, 9. It came down here versus this one managed to stay at 338.2. Slightly bigger. I mean, if this is the case for having a little bit bigger, smaller wave to your 1 higher degree wave, you're gonna have a bit of a challenge to the upside. I know that for a fact. But if you want to take a larger swing to the upside, that remains the same. That is going to be okay. But what you're trying to do here is to see how you can fit 5 small within this 3. That's where your Elliott comes into a play. If you don't want to sit and label any of these 1, 2, 1, 2, or however you want to do that, you can just eliminate everything. Say like, okay, I'm willing to take a risk and think I can play the upside move to 146. And it's just the equal measured move. NVIDIA is very good with fibs. Keep that thing in mind. It kind of, there's 95% of the chance that if I'm going to lay out a fib price for NVIDIA, it's going to hit. You know, because it's a very steady stock. It trades really, really good. Well, if we don't do all this 1 2 1 2, we just basically finish this E right there. Okay, and now we just start the wave count from here. Just get rid of this. Just make the 3 3. So it just becomes all 3. So I will adjust this, but none of them will confirm until NVIDIA breaks 131.26. This is your confirmation right there. Whatever for your triangle or whatever you wanted to do. You know? So here. So this is your confirmation right there. You need to make the higher high. And then we can close this job, whatever it is. If NVIDIA has been like this, it's, I don't know if it's just gonna stay this way for until they report earnings. Blackwell demand is insane, according to the CEO. So if that one is in full production and going out, I mean, they're getting top money for it, and everybody is gonna pay the price to get the Blackwell. I mean, there, what was the last quarter? 32, 31 or 32 billion? I mean, why wouldn't you want a company? Companies making billions of dollars in each quarter. Blackwell, I think that profit is going to go insane. So we can move this thing around. I mean, I have multiple. Let me. This thing kind of makes it a little bit more confusing because I'm running 2, 3 of them at the same time. But we'll see. We're gonna have to. This was a previous high at 127. 131.6 is the high of this swing right there. So that's why I draw this green. And then on the top of it, we have this massive trend line sitting on our head as well. Take this high to this high. And look where we rejected before. Right there. Now we're just coming right back at it again to make another attempt to see if we can clear this. Do we poke a little bit and then reject again? Well, we're going to find out. That's the game. Because that's the rejection right there. Because if you take a trend, because the stock split, I hate it. And I have to go to a daily time frame. I'm trying to fight this thing in a 1 hour. If you take this high, draw these, connect them with this high right there. This is your trend line resistance right there. So we did backed off. And now we're making another attempt to see if we can clear this. So what is it? What is the confirmation for trend line to break? 1 hour time frame, which is this right there. You need a 1 hour bar to open and close above this line. It didn't happen here. We poked that 1 hour bar, but it reversed. And then the next bar, look at the size of this. Okay, it's what they call a fake out. You need a bar to open and close it right there. Then I have to run smaller time fibs and stuff to see. Yeah, trend lines are very, very damn subjective. But right there like this. A bar has to open, close right above the line. And then you have to wait for the next hour bar, okay, to see if the bar still managed to stay above this. So it takes approximately 2 hours for trend line to break. Okay. It doesn't just instantly, I mean, on a very strong news or whatever, yeah, that's different. But just to break a trend line on a regular trading session, yeah, you gotta wait for a bit. Um, so that's NVIDIA is fine. We'll move this one around. Amazon, I that took this dip right there. Whatever, 7, 6, 7 is equal to this and this. I don't know. Um, I'm not touching Amazon and Microsoft. The reason why I'm not doing that is the only reason I'm not doing it is because the rotation. This, you see this Amazon and Microsoft? That's why Microsoft didn't move yesterday at all. And Amazon is right next to it.
Yeah, Microsoft is now below 200 DMA.
I'll reverse. We'll reverse in a couple days. It just I need to wait a few more days for this Microsoft because it's already in lagging quadrant. We could clearly see it where this thing is heading. So we just have to wait and see once it comes how far this thing comes, like the rotation goes, and once it will start to form that hook. Oh, we're gonna attack Microsoft right away, along with Amazon. Okay, so these two will definitely are on my watch list right now. I'll swing few points on Microsoft if I have to, but that'll just take a 15-minute swing. But something to buy for like for a couple weeks and month or 2 months out. Yeah, we gotta wait on these two. But it's coming. It's definitely coming for an entry to get like these rotations. These are very steady stocks. It's just it will turn around. Um, Mags is, I don't know. Tesla is like this. Do a robotaxi event. Look, Apple has lost some of the momentum here. Google is good. Nvidia looking pretty good. Meta is all-time high. So we need something away from the benchmark. This is why like this. This is a one. That's two. When you do like this, that's what they call a two standard deviation move. Okay. So you see these Amazon and Microsoft, both of them are out of that ring now. This is your main benchmark. So meaning when they're gonna come back down here, this rotation when it will turn is gonna have a lot more alpha. And that's what we need. Meaning that it's gonna make a bigger rotation out of this circle, like this. So it's very helpful. Yeah, I mean, a plain a move like you buy NVIDIA, right? It goes up 4 points, 5 points. Okay, yeah, great. We made money and it's a great move. But if you want, like, let's say you have like a 40, like 50 days, 45, 50 days spread, and you're looking for like a little healthy upside, if you have a security that is going like this, it's gonna give you that move, you know. But then if you're gonna get yourself into a 2 weeks out options, and then you just waiting for that. No, it takes time each day. I mean, it updates in a real time. I'm watching every single day, but we'll keep an eye on it. I watch him every day. So the sectors, real estate is down, fine. Consumer staple is down. XLE, I mean, healthcare, we can look into something. It's ready to move. Financials are curving up. So all these four are the ones that are gonna be. You see XLY, Amazon is gonna drag this thing down with it. I know that for a fact. XLY, and then Tesla is another one. These are the two top leaders. It's too close. Communication is strong, of course. Meta. Here's your XLK, and here's your energy going up to the top. That's why energy has moved, making a pretty big move. I mean, I don't know. This is the move basically. I mean, I don't know if it's done. Now it could chop around sideways. Energy can just take a pause, you know. The move is from here to here. I mean, from here to here is it's definitely gets a little bit challenging, you know. So let's see, what is the semis? Semis. Oh, that earnings coming up as well. So AMD. I did this one AMD here. What is that chart? I think I still have it. Right there. Yeah. Still in one. First swing. You see this trend line? Look how tricky it is. Break above here. Second day retest. Boom. This is it stopped me out on a trade. Because I put a stop loss right there on the wave count because I had 1, 2, 1, 2. And then I put a stop right there. And that sucker was a reverse right back up. Oh wow, it's okay. What can I do? Because I have that AMD. I think I adjust this count yesterday. Yeah. So the original wave count was different. I think I did it on a chart room. No, it's the same one. I updated after. Yeah, this is the one in the chart room. So, wow, we taken out this 161.8. Channel broke. So you got 1, 2, 3, 4, extended fifth. And that's your 2 right there. And as your measured move. Because I cannot make a 5 here. Because if you make 1, 2, and 3, this 3 is going to be very short. And then 4, 5, I mean, it's going to look kind of goofy. I mean, it's like, this is okay. You can have a clear extended fifth wave. Wave 2 comes here, and AMD, I mean, the next swing is this 187. I was thinking start doing some of these trades based on these swings. That would just save me so damn much time. Like I know the wave count moves. Okay, I can keep all the wave counts on a bigger time frame. I don't have to mess around with 1 hour window. You can just, let's say, let me just show you how I find a trade based on, let's see, we can on a scan. I have these go no go signals, from Optima. They gave it to me as a courtesy. I'm too nice. So these are the stocks that triggered a go signal on a weekly time frame. Many Darden. Okay, let me do this on a daily. Something triggered yesterday or whatever. Oh, there you go. Broadcom. Interesting. So it scans 500 stocks. So we got 6 for Google, including Google, 6, and then a couple more. Micron as well. So these are the ones that triggered. You can do it by volume and see which one has the most volume, and that's when the signal triggers on the daily time frame. It just scans 500 of the stocks of an S&P. Open up a watch list here. So let's put a name here. Now we'll open up a chart of daily, so we can turn into a candle. We can do go no go. There you go. So I mean, again, algorithm kind of signal. Some of them are really good, and some of them is gonna come and bite you. Like this one is a good one. You can measure the upside with fibs and swing direction, right? But you just have one way to look at. Is this how I see trades? Okay, and this is what it will take to set up a trade. It's may putting a single trade out there. Yeah, I mean, oh, I want to buy this, I want to buy this. Yeah, you can buy whatever you want. I don't do that. I do the work. Um, I could what I can do is I can open everything here. And I want to do a chart over the hell is this here? Open RG. So all the stocks that I just scanned, okay, I can just do the whole list. Like this. So I'm looking for odds, right? So what are we looking at? Okay, we got a go signal here on Micron. All right. Now we go here and we find Micron where it is relative to the benchmark. Where the hell is the stock? MU. I don't even see it here. Oh, it's not here. No, it's here. Oh, there you go. So I was saying, like, where the stock went? Was up there on the very top. That's why. Whoa. Look how close they are. Look where Micron is going. What's going on with Micron? Oh, because they had those earnings. Yeah, that was that earning pop that pushed Micron to the upside. It's making a pretty round bottom here. This is actually making has a daily time frame. That's a pretty round looking bottom here. You know? So we can consider something like this. Okay, so anyways, so we would so we have go here on this one. And then what I do here is I'm going to throw my swings. Okay. So I look for rotation, which is in a leading quadrant. Okay, good. Now I got a go signal. Now the GAN swing comes and says like, okay, well, this high was taken out right there because stock was making lower lows and lower highs, right? Lower high, lower low. And what it did is like it took out this swing on earnings. From there, it backs off. And now it's trying to go signal comes in on this daily bar as of yesterday, telling me to go long. Okay. Now the swing right there is telling me that the second swing is not settled yet. Okay, because it doesn't mean it's going to come down to 90. It will adjust, as I said before. But if this second swing it's here and the go triggers, we're ready to go. Why? Now, what makes that trade odds better? It's in a leading quadrant. Second swing is in. Go signals in. Okay. So where I can define my risk, I could take risk measure tool. Okay. I could buy something here, put a stop loss slightly here, just to make a bit of a room to see if the trade's starting to move. And then you can always adjust your stop, let's say. And then you say you adjust your entry right there. So where do you go from the upside? Okay. So you take the distance travel in a first swing projected from 2 and look for that 100% to the upside. That is your trade setup. Okay. That's your plan. Now you risk money on the trade. You don't just blindly buy stuff that doesn't make any sense. If you have a downswing, okay, you want to buy. You want to buy based on what? Because you just feel like it, you just want to buy, or what? It takes time. You have to connect multiple odds to set up a trade, and then you say like, okay, yes, now I'm comfortable putting 2, 3, 4 grand up on a board, and I will try to see, I will play the breakout. And now I can do all this what I just showed you, just define risk like this. I can just take this, and then if the stock moves, starting to move to the upside, now how much upside do we get, or what is our plan for the upside take profit? You just measure the swing. You take the low, you have a high, which was already taken out this high, because first you're not gonna have these swings because you don't have this software. It's okay. You take the distance travel on a first swing, you project it from this low. What is your 100% target? Is right there. Is it a reasonable target? Yes. You rid of all this. So can you get to that 100% measured move? This is your trade. This is your plan. And now you enter the trade and you wait. So if I can give all of you wave count and this wave count and this, I can do that, but not in the middle of a session unless we're like completely bored out of our. I have things to do. I have to find trades. It takes me time. If I am right more than I can be wrong, well, there's the reason for it. Okay. I'm not saying that I'm not going to be wrong. I will be wrong, but I know this thing
for myself that I'm that confident when it comes to trading and investing that I will be right more than I will be wrong. I will write that thing down on a piece of paper. Why? Because I do the work. I don't do any shortcuts. Your goal is to make money. It's just not, it's you playing real money. It's a hard earned money that you have in your account and you're trying to grow. You have to learn the business. If you don't want to learn the business, you just follow me. That's all. I'm risking money. Just say like, okay, I'm gonna be in. Mo is in. I'm in. But you have to look at the picture where you put throwing money in. You know, those are really like really important. So this was what I am looking for. Like I'm scanning. I mean, I have tools that I can use. This is again, I'm not fully rely on these go no go signals. This is just it's a paid subscription, anyways. But I'm I work with Optima on a daily, like a lot, and those guys help me a lot as well with scripting and things like this. So there are sometimes they're give me, these subscriptions that they have affiliated with their software. They just give me as to, just to test it out and stuff. They're like, hey, we'll just give you this one, use it and see if you like it or not. So I don't know how much they charge for it, but well, I have it for free. Let's put it this way. So we use it. If it comes handy, I mean, shit. I mean, we will, we can use it as one of our algorithm, kind of whatever you want to call the, signal, and we'll just see if we could play the upside. But the point is not just like I'll make one simple wave count. This is it. Okay, that's tough. I've learned a little hard way as well. It's just to rely on one single chart and to deploy cash and thinking like, okay, now I'm gonna hold my breath and see. I hope I'm gonna be right and this thing will go my way. You know, you have to put up multiple odds. You have to know where the security is compared to the benchmark. The most important thing is this. If you don't have this, then you can always look for a ratio chart. Okay, ratio charts are really good. You can use those as well. Okay, the ratio chart will give you a pretty good close comparison to the RRG as well. But you gotta have to find and see if you have that access to it. You basically what you do, you take the stock price divided by S&P 500. That gives you a ratio. You see the price, this the print right there, 0.030. That's a ratio price. So I use a 20 period exponential moving average. So meaning when AMD, because you're not gonna have the AMD the right price here because it's been divided. If the line chart has to be line, no candles, no bars, no whatever else you follow, it has to be the line. If this line, because it's based on a closing base, it's going to give you the most accurate read on a price when it comes to a line, because the line doesn't have those high and lows. Those are day-to-day price action. I don't care. You don't shouldn't be cared about those. The close is everything when it comes to a line chart. This is why all your data that comes out, your NFP and CPI, is all line. There's no high and lows on CPI or data. There's all based on the line charts. The economic calendar, it only runs online. Okay. So like AMD right now, it shows what? It has the better relative strength. Why do I know that? Let's confirm this. We just looked at it, AMD. Right there. It's already in a leading quadrant. So where is the benchmark? Right there. It's outperforming the benchmark. It's just the same thing. So if you don't, if you have to find, I don't know, what do you use? But Thinkorswim doesn't have ratio charts. But I don't really look into it anyways because I have RRG. What the hell it went right there. So some of these stock like Nvidia, see now it's popping up. And now if you open up Nvidia, it will show you is either in an improving or heading toward the leading quadrant. Meta completely outperform, Tesla fighting it, you know. This dip right there came right back to this 20, and then now this Friday yesterday pop the Tesla had for like what 9 points. It's time pushing this ratio right back. It's trying to hold this 20 period. It's gonna start cracking down here. Yeah, and then Tesla is gonna move from leading quadrant back toward the weakening quadrant. You know? So it helps. Way ratio charts are really good, but people don't. I don't even see any listing and stuff. AMD is good. Google is good. It's picking up. I got leap on it. See, Apple under pressure. It's fine. I mean, it's not that big of a huge. But I like. I mean, you could use 50 if you want. I mean, that would move the line based on number of days. You see, I like to use 20. 20 has a pretty good results. And the same thing with RSI. RSI 5. RSI is much better than the lagging fake one, the 14. Microsoft. See, this is why I scalped those calls a couple days. It was just because of the signal came. But Microsoft is under pressure right now. You can see how nasty this ratio chart even looks like. Okay. So Netflix is good. And that's gold. So I can put any stock here. It doesn't really matter. I mean, if you have whatever, name one stock. Say, let's see, BKNG. See, outperforming. It's gonna. I have that thing set up like this, so it divides right away. It gives you the exact ratio, what the ratio is. So you can do silver. Silver is silver is good. So you can either do that or you can just do this. It's the same thing. Either way you want to look at. Yeah. But we have RRG. We have a much more advanced stuff, so we're good. Micron, second, so Broadcom. Interesting. It's just that gap because of the stock split. I triggered a gold signal yesterday on Broadcom. Right there. Same thing. Micron, Broadcom definitely worth buying the weakness because they're gonna be in a 1-2 swing. You're gonna have a third one on Broadcom. It's a very steady stock. Trades are really, really good. Top is 180. I don't know if it is the same one is gonna extend to the upside because I don't even have a print for the 2 on this one, So to play on the upside on this one based on this signal is 176.64 is to take out and see if the Broadcom can take out 180. I believe that's what 1800 old price. This one right there, Huntington Bank share, whatever. Kind of narrow swings. Okay. You see, that's tricky. From no go to go, right next to each other is on 1 day apart on bars. That's got a poke here, got a pop on the 5th. It's okay, but the swing is narrow. Let's see what the 3 bar looks. Yeah, it's in a do the unconfirmed. You see, you got that down. It doesn't have, the swing hasn't turned up yet. It can. Man, this is a P5 swing. At this low has to. No. Yeah, the only way this thing is going to turn down, it has to take out this low. It's going to become a failed swing. I'm just picturing this. Does it look like a triangle? And no, 1, 2, 3, 4. It kind of, yeah. I mean, you can definitely make a case of a triangle here. Connect this high right there. Take trend line, connect. No, it's a bit of a throw. It's okay, but it's still above this low anyways. If that's the case, A, B, C, D, E, then it goes, well, how do we define risk? 14. So that's the entry. Put a stop loss here. That's your entry. Just leave the upside. Take this measured move. From here, projected either from this low or this low. And look for this 100 right there, just to get to this. And then if it accelerates, you can always open more upside. It's not bad, but it's just a matter if it's going to chop around in a triangle or not. You know? So we'll keep an eye on it. It's just a 14 buck stock. It's gonna, you need to size up that trade heavy to catch a 2-point move to get paid. What do you want to carry 500 delta for 2 point is $1,000 move? You're gonna carry almost like what, $2,000 delta or something, $1,500 delta for 1 point move, a 2-point move to make like 3 grand or so. Google, not the actual. This is the. You see, gold took out this high. Beautiful. This is nice. This is nice. The way we have leap, so we're gonna hold them. We're definitely gonna hold them. If it does come back down here into the second swing, we're gonna buy another leap, and then we're just gonna, you know, then always we're definitely gonna add if we see weakness on Google. Google, it's okay. It's looking good for for the upside. Very good. I like it. So 193 that'd be beautiful. I mean, it's gonna take time, but well, we have time. Nothing to worry about. Google is good. E Corp, narrow swing, EOG. That's the energy play. You see the fail swing came back down because it took out this low, and now it's still in a second swing. It's gonna fight this third until it breaks this. Then it becomes 1. So it needs to take out this. This one is good, interesting. Phillips 66. Huh. That's number 4. It needs to break this. Need to take out this. It's almost there. Pennies away. It was a go signal right there yesterday on that bar. This thing was gonna take out. What is this one? PSX. Oh, that Cobra right there is heading straight here. 66. So now what we can do, we can do 2 swings. Okay, that's where the swing is gonna, that thing is gonna, it's gonna turn up. Rotation looks good. Stock is here. We have one swing here and one swing here. So what do we do? We're gonna run some fibs. So we run fibs from here to here, from here to this swing. Get rid of all this. We don't need this. So we have 78.6 at 144.48. Then we take fib run from here, oops, to here. Now we look for this. So we can do this. There you go. We don't need 161.8 for now. 50 is good. So now we have two zones. Okay. Our first zone, where the heck is my here. And here we have this. So we have two prints. 142, 143, 142, 144, 148, 150. So rotation good, go is in. Now we define our risk. We take entry here, put a stop loss right there at this. I would actually do it here because this is where the swing got changed. You can use it here, then we can always move it more. Whatever, you can just leave it here. 1, 2, 3, 4. Break this. 1, 2, 3, 4, 5. So I'll take 1 week of 5 bars. Put a stop loss at 5 daily bars below. That's your entry right there at 140.60. And that's your take target for now. For now, like this. It's a good trade. 5. So go is in. RRG looks good. Entry would be here. Yeah, if it slightly pulls back, yeah, we're gonna deal with it. And put a stop loss at 5 candles down for now. I mean, you can always raise them up. And then if it breaks here, 142, get to this zone. Okay, that one is gonna fight this 78.6. It's because it's from this swing. This is where it has a fail swing. It's gonna fight this zone. If it breaks, it eventually it will, because it's coming back down. This looks like a pretty nice wedge breakout, to be honest. I'm just like picturing multiple. When I study chart, my brain just works. It scans multiple patterns all at once. It's a nice ending diagonal, basically. That's 100%. You got 1, 2, 3, 4, 5. That's just what, on the Elliott perspective, it's just you can make a clear ending diagonal. That's the breakout. So the ending diagonal, 100, your first target always going to be this. Your second target is this. That's exactly what I just laid it out. Doing the swings. So you swing with Elliott. You see how it matching? But yeah, look, this looks good. So how do we play the upside? So we could do, I don't even know. I've never traded this stock before. I'm just doing everything with right now. Let's see, what is this? PSX. This is what it takes to put up a trade together for you, for your information. PSX. Oh, the options. Oh, got like some calls got body yesterday. When do they report earnings? October 29th. So October 29th. So we have how much time? almost over 3 weeks.
So October 29 is 3 weeks.
We'll be right around here. November 4th. They'll go into a weekly. 30, 15 is a monthly. So on a monthly 15 November, they have a 12-point move imply and the option market is pricing in $12 move. It has a 34.34% implied volatility. So our strike price, looking at the chart, is what? What are we trying to target? 142, 144 to 150. So 140, 138.62 is the price. So we can grab one at 140 and 150. Okay, so that'll give me 50 deltas, 49 and 29. We could do 36, and then we can just sell something way out of the money. That will make the spread a little bit cheaper. So if you do 140, hold the control on your keyboard, and then hit sell. That's $3.28 for one. That gives you $328 worth of risk to make $672 for one contract. So you just right click, analyze trade, go to your risk profile. Now here's your 3 slices that you see. So it gives you price slices. You can have multiple or even 3 is good.
So here's a price right there. So now I gotta bump it up. I'm not gonna trade 1. Let's make it 5. That's 16. 7. That's 22.96. So 22.96. I'll keep them at 1960. That's good. 6 count. I tried like 2 grand. 2,000 now. They give me 145 deltas, 9 theta. So what I'm looking for is a 7% move. Is basically to the upside. So 7-point move. What does my probability looks like? So what you can do is you got the dollar signs here. That so the top price right there, a 10% move from the current price, the payout is $2,047. Minus 10% move to the downside to the price of 124.76. That's your current price right there in the middle. Is a loss of $1,508. Okay, so this is your probability. The analyze that tells you what your risk is. Now you're gonna bring this thing down to 7%. You can just change it manually. So the 7% move here, that gives you a $1,463 if the price will get to this 7% to your profit. And you want to put a stop loss or define your downside to at 5% to the downside. It gives you 1,000. So you're risking 2 grand. You're risking half of it. Okay, on the premium, because you're gonna have time decay. So you can define risk before you enter a trade. What will be your expected payout versus what is your downside risk would look like based on 5% stop loss. You can make it 4% stop loss. That's just your stop loss line right there is going to move. You see how it's moving? So you can adjust that. It will tells you everything right there. The one in the middle is your P&L for the day and open, realized and unrealized gains or loss. Okay, so you could play around with this. If you don't wanna, if you just want to reset, just there's a little 3 thing right there, reset slice, it resets everything. So the standard way, the way have Thinkorswim toss has everything
program kind of, with the standard settings is 10% move. Called, basically one standard deviation move. So if I don't know what the one standard deviation move on this one, but they just had them as a 10, but you can always change them. You can manually change it or however you want to do it. If you just want to do two standard deviation move, you just click on this one. You see how it changes from dollar signs? So right now it's on percentage. So from percentage, you can click on it once, that little circle, okay, that pops like this. This is your one standard deviation move, okay, by that expiration. It's the same thing here to the downside. You can make it like this. So the same thing that I just shared. So if you says like, okay, well, I want to go out 41 days on my play to do 140 to 150. So I'm looking for a move from 140 up to 150. I'm using this stop loss for now. If I get the breakout, then I can adjust my stop and move them 3 more days up to the daily low of the bar right there, and then if the trade progress from there, you can slowly move this thing up to the each daily bar. Like you have 5 bars for 5 for now to start with, and then after that you can move 2 more up to this low, low of the day for that, which was 4 or 5 days ago. So it depends how the trade progress. Okay, so you go to analyze tab, and this is where it defines. So you could do percentage way, or you can just do simply click right there once if you're gonna have a trade before or after. Right now, because the trade is not in yet, it's just gonna you just analyzing it. Now it's just gonna gives you the 1 standard deviation, 2 standard deviation move. So that gives you the same $2,000 payout on this one and $1,500 loss on this one. So you could make a 1 standard deviation move. The little thing opens here because I have multiple. Now you make it 1 standard. So now it allows 867. Is this line right there. So you're just moving this line. You can manually move it as well. Okay, that tells you the same thing. And the same thing to the upside. So you have 3 lines. One here, one here. This is your current price line, 138.62. So if you wanted to use if you say like, well, okay, I'm here, I want to use a stop loss here. Okay, so you can just leave it here, 131.63. Now you go back on a chart, 131.63, which is right there. What is that, PSX? So you just go here and set up alert there. 131.6, oops, 61. So that's your alert. So that's going to be your stop loss. So now you go back. He says like, okay, my take profit is 150. Okay. So you have this. Then you're going to go to your analyze. Oops, chart. Go to alert. Right click. Create alert. 150. Hit okay. Create. Boom. So this is your trade right there. So now now you push the button and you enter the trade. So now the trade is on, right? You did the work, you defined your risk, you know where your take profit is, what your target is, you know where you're going to put your stop loss is for now, and then we'll see how the trade progress. You set everything here. I just did it for you. Okay. Come on, help it. Here. That's your take profit. That's your stop loss for now. Okay. So you're risking $2,000. Right now it has a $908 stop loss and you have potential to make $1,700. Okay. And you can set up an alert there that will notify you on the chart and on your mobile app as soon as the alert, either one of them will hit. Just let it work. Now, if you have this trade on, what is the point for you to sit every single day and looking at the trade? What's the point? You're just wasting your time because I just wanted to see how these open bars are open, closing, or whatever. You have alert that one of the alert is going to hit. You're either going to get stopped out or either you're going to make $1,700. That's you define your risk by doing a spread. There's no point. Trading is fun. It's not a punishment that you have to take every single day. You can do whatever you want to do in your life now. Go for a walk, go sit and talk to your dog or whatever you want to do. Your risk is defined. You know what your plan is. How you can trade without a plan. Okay. So you take multiple. I mean, what is the point for me to make a wave count here? I just don't get it. I can do. I have this is my trade. I can risk this much. If the trade progress from here, eventually I have 41 days. 41 days. That's a lot of time. You know. But again, we're gonna suffer the earnings and things like this along the way. But you know, that is different. But the point is, I'm just giving you an example how to set up a trade, okay, by without being glued to the screen all day. You can do whatever you want. If you're working 9 to 5, you put the risk on. Good, just close it. People have other things to do every day. You have to go somewhere or you have to do something. You have price alert. I always tell you guys, use the price alert. Is it really like easy to sit all day and just kind of watch every little move? Or if the price can dip down a little bit, like what do you think is going to get changed? Nothing, you know? So that is, you could, this is what it takes me to set up trades. This is not just, and how, and let's see, how long does it take for me to put a trade on? Take 140, oops. Take 145, whatever you want to sell it here. 145, one here, 145, 155, bump it up to 6, 7 contracts, 7, 8, confirm, send, boom, done. How long does it, how long does it took? Less than 30 seconds? Literally less than 30 seconds. If I wanted to buy calls, that's going to be even faster. 580, go to like 230, somewhere around here, 230, 235, confirm, boom. How long does it took? 15 seconds. 15 seconds, you just bought calls because there was a big heavy volume here or some activity or whatever you want to say, whatever, you just hit send, confirm, boom, done. You have 2 grand, 3 grand up on the board. I wish I can trade that, trade that way. If this is what you're looking, this is what you're hoping and dreaming for, a big money to come to you. Because you looked at a big volume here, there's a lot of noise out there in a certain stock, and stock is going to explode and this and that. Yeah, just pick a call, pick 10 here, hit confirm, boom, done. $37 worth of pocket, then let's go. Because I'm just chasing the big pop. You got to do the work. You got to sit and do the work if you want to make a lot of money. If this is this easy for everybody, that who cannot buy a 40, 76 days out options. Everybody can do the same thing. What do you want to pay? Is right here what it will cost you. You want to grab 76 days out calls, 150. Okay, cost 325 bucks per one contract. What do you want to bump it up to 5? You want to bump it up to 10? You want to do 8? Okay, analyze the trade. Let's go back and see how it looks. Cancel the spread that we just did. Here you go. So now you have, I'm going to reset everything. So here you have, you can delete them as well. You can take right click on this one, delete slice, take the third one, delete slice. Now you just only have a one single eight contract, 150 calls. You paid $3.25. So what are you doing here? You have a 241 delta. You have a total risk of 2,600 bucks. Every single day to hold premiums is going to cost you $35. Either the stock goes up or stock goes down. It's going to cost you 35 bucks to hold these premiums. If I move this thing, now stock is starting to move. Stock goes up to 140. Let's say it get to 140.98. How fast it gets there, nobody knows. 142.98. So in one day, if it gets there, it's a beautiful reward. Excellent reward. You caught the move. You had a perfect timing. You got 138 to 142 move instantly over in a matter of a couple hours. You made 1,100, 1,200 bucks. You risk how much? $2,600. That's a beautiful payout for $2,600 worth of risk. And you're done. So you don't have to suffer this. Now the question is, if the stock goes up to 140, to here, this is where we have the second swing high, which is 140.85. So you have 140.85. You can manually change this. 140.85 you can put here, because I'll lock the price for you. Oops. 140.85. Come on, what's going on? Why is it not letting me put the... Okay. So 140.85, which is this right there, to cost you 2,600 bucks with $577. Because you 276 long delta. That's a good payout. By costing you 36 bucks. How fast is it gonna get there with nobody knows. And you hit your, if this is your target, that's your trade. Now, if your target is 142.98, you can see how much it's gonna cost you. It's gonna, you can make 1,200 bucks. But how many days that thing is gonna take you, that based on the premium that you're holding. The time decay, which is $38, is gonna cost you. Now, if the price, which is here, is slightly moves up, so you're 117 for the next day, and then the next day you come in and the bell opens, here comes your 34 bucks against the profit that you made yesterday. So if the stock for the next day doesn't move much, add another day. So it doesn't every single day, as long as you're in the trade from today until the next 71 days, you're going to pay theta to hold those premiums. Right there. So it doesn't matter from here if the stock can go from here to rips here. You make 2,400 bucks. You look at this. It's never going to go away. So every person, not every, I would say, most of the person out there, traders out there, sorry, they're losing money on what? Time decay and the Vega. Vega is implied when the volatility is going to spike. Vega is going to go up. But the point is, yes, you have the direction. But the question now, the challenge part is time the move. How fast the position is going to move. If you are in a single call directional bet that you're willing to make, yes, that's the way to go, right? But you have to be done with it as quick as possible because holding those ones, okay, is sucking up, it is literally sucking you up. Yeah, one day is not going to move this much, but expect like if the stock can go up a little bit higher. If you down here, let's say, okay, you enter the trade, now the stock went down 3 points against you. You keep adding the theta per day. Stock comes back up a little bit. You see? It could take 3-4 days. Every single day, this thing is not going away. You want to do a business either with a person or whatever you want to do. The business transaction has to make sense, right? I come to you and say like, hey, I have this idea and this, and you were like, well, wait a second, this is just an idea. You asking me to give you money for it? How many ideas you had before? What's your success rate? You're going to have so many questions. It's the same investing concept. Doesn't matter. It's an option position or you buy shares. Yeah, you don't have time decay. But when you come to options premiums, that's what most people out there are fighting every single day. Okay, is to get the directional move up. But you have to look what is costing you per day to get that move. I hope you get there as quick as you can. But if you're not, well, goodbye. That's where your money is melting now. Because this little red number right there is moving away from you. Because first of all, you're buying 150 call. So what is your break even on this call? 150 price plus the premium that you're paying. 153.25 right there. This red line, 153.25. This is your break even point on this call. Because you went out to 150, which has a 30 deltas. It's a good probability. 30, 35, I like it. It's a very good probability. Trades. Decent premiums and a good probability trade. But you're going to have enough time. And then you says like, okay, fine. And now I'm willing to play this call to the upside. So you can do this. See, this is exactly the same way when you buy a put because you're coming down now. All you do is just reverse the course. Now you're bearish. The bearish has time decay as well. Okay, so it depends where do you go. Now, if I would go and pick, instead of 150, I will buy 140 calls. Now the premium is going to be double because I'm going 50 deltas. Now I analyze this one. So if this one cost me, what? 8 contract cost me, what, $2,600. I can adjust this one to 5. That's 34. Make it 427. 149. I'm trying to see if I can adjust deltas. Yeah, it's going to give me a little bit less. 4 gives me 200 deltas compared to 8. That gives me 222, slightly big. That gives me $36 negative theta per day compared to this one gives me 22. Versus I have slightly less delta because I'm paying more for the premium, but I'm going to have a little bit less time decay. So it all depends on your, on 50, 40, 30 is the range that you wanted to play. So these are same concept. So instead of going up $222 on out of the money, basically way out of the money calls, which cost you half the premium, for 8 contract costs you $222 versus at the money is 200 deltas cost you $22. So it's the same picture. Nothing has changed. So you go up, at $20 lingering, like it's hitting you every day. Stock goes up, takes a pause for 3-4 days, and the week with the inside weekly bar, that's it. That entire week, your premiums are just. This is why I always tell you, stay away from inside bars. Those are the worst one to trade. Find something else. Do not trade the inside weekly bars. Those are the best ones if you know how to trade butterflies and stuff. But you don't know where the inside bar will be, but a lot of time the inside bars will be, you will know by the end of Wednesday. If the price is too far from the previous weekly bar, okay, you're gonna have a pretty good chance that it's gonna have do this. I hope you're learning something. Let's see, figure this out.
Yeah, we are learning a lot. But I thought that you were going to focus on butterfly and the diagonal
I will.
today.
I will. So here's your weekly bar, the black ones. Not that many. I'm just picking up around this almost just only talking about this as an example. So this bar's right there. You see, it doesn't make a new high, it doesn't make a new low. So it just stays in the middle. So these are not directional bars. You want to go up, you need green. You need higher highs. You want to come down, you need a red bar. You have a neutral bar like this, you sit back, learn something, or either you just don't, or find something else to trade. But don't trade that one particular stock. That is not making a new high and new low. Okay? It doesn't matter if it's a Tesla, if it's Nvidia, if it's Apple, might just stay away from that stock. There's plenty more that you can find, but don't fight this one. When you have a guy who Gann told you this thing years and years ago before he died, those are non-decision bars. And when it comes to a blue bars, one of these ones, what do? You have to wait for the next day. These are very tricky bars because they make high and low for the for the previous day. But they don't come that often. It doesn't work because the trend goes in one direction. Either it goes to the upside or either comes down to the downside. These suckers right there, they're gonna pop somewhere up in the top, or they usually sometimes forms in the bottom. Okay, and I've showed you. I'm not gonna go back there again. I've showed you this thing many times before. There is gonna these are scary bars when it goes on the very top of the chart. I've seen a lot of reversal happens. Once it starts, this thing puts right up on a very peak. But if it comes right into this middle part, like you see, like you have a high here, you have the high here as well. If you engulf here, you can have the downside, and then because you're uptrend, you're still in the uptrend right there, the price can resume right back up. But if this sucker just pops right all the way up here on the top like this, and there's gonna be no highs and lows here, there's just a one standing tall blue bar sitting like this. Those are the scary ones. Here, there you go. You see? Look at this decline. I can show you thousands of these examples. They're 27% decline. Now this one right there, you see it has the high here, but it didn't make a new high because it only engulfed with this weekly candle. It did cut the weakness again as well. These are not, these are, you have to be very careful if you come across these ones. You know, this stock has put a top, oh, what stock is this? Deck at 184. It has took a 27% dip to the downside. Took how many weeks? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 weeks. You have 4 weeks in 1 month. So that's 4, that's 1 month. 1, 2, 3, 4, that's 2 months. 1, 2, 2, 2.5 months of a decline based off this top bar right there. I told you S&P 500 put this one on a monthly up on a top like this on a monthly bar have ever engulfed. I want to clean the board really good. I can tell you that. You know. So we're good. I mean, I'm not. I mean, just gotta have to take it month by month or week by week. But I'm gonna be. You gotta define risk. Okay, that's very important. Now, if you instead of fighting all this time, the best way to trade to play the same move to the upside. We just talk about. I just delete everything from there. We remember our strike 140, 150. Is to make a diagonal. You can do a spread. Now, if you want to do a 10-point spread, which is 140 and 150, that costs you 365, right? So the 365, we already analyzed that thing with 8 contract, give or take. Okay. So that costs you $6 in negative theta per day. Is it easy to handle $6 against 20, almost a $3,000 worth of a premium that you just paid? Or it is easy to pay $36 or $38 per single day if the stock is gonna take a pause on you. What is smart way to do? I would do this. Why? I'm too bored or I have too much to pay just for these worthless premiums every single day because I just want to hold them for the next 71 days. Yeah, you have a $40 less delta compared to your 200 that we looked at them on those calls, but you're paying half the price and you're at the money. Instead of buying 150, you buying 140 and you selling that 150. Yeah, I can make this thing to 155 and I will pay 468. That gives me 223. Then I can drop one contract, bring it to 200 delta. You see, now you find trying to see how you want to adjust your trade. How many deltas you want to carry to the upside? 138.62, 139.62 pays you what? $193. What's your delta? 199.26. You take 199.26 minus the $8.37 theta that you're gonna carry. It pays you 193.97. That's it. That's a $1 move for the delta that you're carrying on the spread or on the call. Now you're gonna go into a $2 move. 394, 202, $7. So you went up 2 points. You're talking $6 to $7 per day. You know, either if you come back down, it's still $10. You're not losing that much delta. Because why? Because you have a 140 strike close to the money. The 50 delta is going to have a lot more intrinsic value compared to a 155, which is way out of the money, is going to have a more extrinsic value. Okay, so the more value that you have, which is near the money, and if I move this thing and then, okay, I'm gonna go back to 135 strike price, and then I will sell 150. Now I'm gonna pay double the premium, 214 delta, so I can keep it a 7 contract. So my cost goes up. Now I'm paying more. Now my theta drops to $2 because I have 135. It has a lot more value, and that gives me the same delta. So you can play around with these. Oh, you cannot pick the 136. You can play around with these strike prices, but it all depends here. Now, if I open a trade on a spread, or you says like, well, I open a trade with 135, 150, and I went 7 contract, and you like asking like, oh man, I don't want to pay this much. It's a pretty expensive cost, right? But you don't guess anything on a spread unless you analyze to see exactly what delta that you're gonna have per point. See, when I'm trading, my focus is here, not the cost that I am paying. I understand the cost is important. It's gonna cost me what, $4,400, but I'm not gonna let that thing go to zero. I mean, I understand that I'm paying for it, but how much is my 1 point is gonna move if I'm paying this much money? It's $215. What is against me? $5. So what I'm making, $210 per point. So if I go down, I'm 375 down this. So $6-7 is easy to handle. Yeah, I can handle. If the trend is good, if the trend is up, I'll stick with the trade. If the swing is right, RRG looks good. So I have that I'm watching. I'm trying to manage my risk and see like, okay, if those swings, everything looks fine, I'm in a trade. If those things are starting to turn against me, I get out. I was wrong. Okay, well, you were wrong, you're wrong. Everybody's wrong. I mean, it's not a crime to be wrong. But if the trade doesn't go according to your plan, it's okay. We're gonna find another one. So if so the stock from 138 come down to 130, yeah, I take a hit. Theta goes double. I lose quite a big chunk of deltas. So now should I open another one down here to average this sucker down? So if I open up another one now at 130, I gotta pick another one to see if we could put another trade with another 4 or 5 contract to see if you can bring more delta. Now you bring in more delta, meanings what? You increase in risk. You're already down $1,700, and now you're throwing more money on top of it. You're trying to fight to see if you could come close to your break-even point. You increase in your risk. If something is starting to go against you, why are you increasing risk? Like somebody explain me that part. You have a plan when you enter a trade to go up. Price is starting to go against you, and you start adding more money. Okay. Why did you do that? Because you just want to average. Those averages are going to destroy you one day if you keep averaging those averages are like once in a blue moon entries that you will be able to get something in the middle that you're gonna be able to break even, because that by that time you're gonna get that move back up. It's gonna be painful because you're gonna have a double triple the theta against you with more money that you just throw them on a trade. Simple as that. I'll give you an example right there. Here's team. We're in a trade, right? We have an open trade right now in this stock. I started this trade, okay, from here. That was my plan. I was like, okay, I have 5 waves up. This is the zone that I'm going to be start looking for entries. 23.6, 38.2, and 50%. This is going to be the zone I'm looking for entries. What happens here? Price came back down here initially, went up, came back down. You see? Now I'm starting to realize like there's nothing I have a clear 5 waves up. This thing right there, I cannot even count though. I don't know what the heck is going on here. I was like, this is just sideways wedge pattern. It's like, okay, I'm gonna keep. I was watching swings, and day by day, these like just keep chopping around, you know, up and down, up and down, up and down. I was like, this is a sideways consolidation. I was like, I have more than 40 days, you know. I was like, a lot can happen in 40 days. And finally, I mean, it like if I stretch this thing here, now you look how many times this price has came back down here back in September 17th, got the pop right there. I'm looking at this 38.2. So get the pop right there, nice pop. Then finally just like keep melting all the way back down again. Just give up everything which is pop right there, right? Came back and then came, it's just like chopping around sideways. And I'm just being patient. I was like, well, what can I do? I'm not gonna throw more money. Okay. The price is just chopping around sideways. I started looking at the RRG. I was like, I understand that thing is in a lagging quadrant right now. It is gonna make its way up. Okay. And then look what happened yesterday when Microsoft and everything just look at the pop rate. It took out this high right there, 169.71. So this high that was a resistance. Now we have what? We have a high here, higher low, higher high. So what we can do here now is what we're gonna do is we're gonna move this stop now to here. So now we're gonna do is we're gonna fit. I like to get here to 194 to be honest. That would be the perfect target for this trade, is to take distance travel here, project it from here, gives you a measured move of 100%. We'll worry about the rest later, how the third goes to 161 and that's a long way there just to get here. So how are we going to get here? We need to fit five small little waves in. So the 5 small little waves comes in what? So we need to count 5 here, 3 down, and then 5. So instead from here, we take this 1, 2, up and 3, right at that 161.8 into that 200 zone. This is where the third will come to an end. It can go to, I mean, it already hit 161.8. It can hit 174.48, or it can go as high as 179.98. We're still not close to this, because this is a larger swing from here. And then from here is like what we could, if this thing ends here, then we need to handle this fourth wave. This fourth wave cannot come down here. So we got to put our stop loss now here, 163.38. So it's going to cut our risk quite a bit now, almost to nothing. If this thing goes against me, okay, well, fine. It didn't work according to my plan. I got stopped out. Did I lose my ass off? Absolutely not. I had a pretty good potential, for this thing to move back to the upside, but it didn't. So, okay, we'll find something else. Or I can just take my money here and just call it off. I can do that as well. I mean, that's the decision that you make and I have to make every single day. Is that a good decision to cut a trade where I'm at right now? Or should I say like, okay, hey, you know what? I have 41 days. Okay, I can just let this wave count work. RG looks good. Swing looks good. Go signal is in. Wave count looks good. I just stick with the plan. Right? So if all these things are in your favor, does it give you a confidence to be in a trade? 100% gives you a confidence to be in a trade. Why would you cut your loss? Because the price went up there. You cannot handle a 4 or 5 point dip to the downside. Worst case, yeah, you're gonna come all the way down here. What happened? Is it better to lose this much while you entry here versus losing this much? So we'll see. I mean, I didn't close it yesterday, but now the question is, now you're gonna say like, well, I should book my profit here. Then I'm gonna see if I'm gonna look entries back. Well, you don't know that, because this thing can change in a different way. I can adjust it like You know, you don't know that if this is a 3 or this is a 4, then we're gonna get your 5 up. Yeah, you can't trade wave by wave. You gotta start going into a bigger time frame. You start looking for entries in 4, and then you can, if you're in an existing trade, you need a third wave anyways. This is where you're gonna make the most money, in a third wave and extended fifth wave. Those are the two powerful trend waves to the upside that makes higher highs and higher lows. You know, third is the money wave, you call it. This is where the premium's gonna go crazy, and that's where we got the price got a big pop yesterday as well, because of the third wave, right to this 161.8. Anyways, so this is a spread, and then if you want to do a butterfly, you can do a butterfly as well. There's many ways you can do a diagonal as well. Okay. Now let's say you want to do, let's pick up some different, let's do a Microsoft. Okay, let's do Microsoft 41 days out. We're going to buy the dip on a Microsoft 32 days out, 32-point implied move. Stock is at 416. You go back to a chart, see what the chart looks like on a Microsoft. You're not gonna make anything if you don't have the right wave count. You need wave count to make to pick up strike prices, meaning the fib prints. You know, RSI is puking. This thing is down here to 61.8. Okay, worst case it can come down to 409. Okay, it's a pretty decent zone for the stock, which is that important for the entire market, anyways. So it's 415. You're looking at 426. That's your first resistance. Okay. And your previous resistance are 441. Okay. So you need to pick 400. That would be your support right there. That's basically is going to be your stop loss. This is going to start making lower lows. Okay. And 415, 426. Now for 426, you can make a spread out of the money, 425 and 440. You can do that. Okay, that's a simple spread. You can make a butterfly. Okay, where my chart? You can make a butterfly for the same move. Here. So we want to go to 426. So you do 41 days. You can just buy even more time. The butterfly is going to be way more cheaper than a spread, than a diagonal, anything else. So you want to do 41 days butterfly. So 420, what's the strike? 425. So we're going to take this and then 440. So we're going to take 440 right there. Okay. That is the one that we need to take out. So you right click there, buy butterfly. Okay. Instead of a diagonal or whatever, you click on butterfly. There you go. Now you have 3 strikes. Okay. So you take a 440, which is your previous high that you need. Now you take 426. That's what you need to break. So you adjust this one. It's opening on my lower monitor. You take 425. So you take 425, 440, and then you can just buy any call up there on the top, which we will adjust. Right now, so we have a 425, 440, 445. That costs $4.13 per one contract. Let's analyze this. Here's this. So this one right there is what? 425 minus 440 is what? A $15 spread, right? It's a $15 spread. So if I do 450, well, yeah, you should. I think he texted me. So then it's 450. So that's a $10, right? So you want to make a $15, which is 455. So if you do this, okay, on a one contract that costs you $2.18. So what is the way to make money on this one? This is called balanced butterfly, right? So the balanced butterfly is you want to go from here all the way here to get inside this tent, right between this red line and this red line. And you don't want to go away out of the tent. You're gonna start losing money. This is the called balanced butterfly. You can make it at the money, you can make it a little bit out of the money, or you can adjust, you can play around with these strikes. Now you says like, okay, well, it's only $2.80 per point. Okay, that doesn't do good. Now you gotta size up these trades. You gotta probably go like 50 of them. So if you're gonna go 50 contracts, so your long 50 is short 100 and long 50, 140 delta. But right away, you're going to be positive theta. You cannot lose money. Okay, you will if the stock is going to go against you, but you always is going to be positive theta for a very long time. You see? Every single day, I mean, I went up all the way almost 2 weeks or so. Let's go by the end of the month. I mean, if the stock is going against you, okay, theta is in your favor. And if the stock's starting to move, that's your payout right there. Now the thing is, if you start coming up here on this stock and you come all the way up inside the tent right there, okay, and then each day, now look at your theta goes up per day. Now you're making $300 just to sit on those premiums, just to hold them. Look at your delta, literally gone. I have no upside delta left. Okay, so each day, passage of time, look at your theta goes. Every day. Every single day, theta just increase. This is where the line is elevating to the upside near the expiration. But you need to stay inside this tent. If you get out of the tent, you're going to start losing money. That theta is going to go against you. This is what they call a balanced butterfly. You make a predicted move, thinking the price is going to go up, and it will stall there for X amount of time. That's what you got, the monster. But your odds are so low. Yeah, who doesn't want to make $63,000? And how much did I risk? 10 grand, 10 grand. It's a $10,000 butterfly to make $64,000. But you have to hold it all the way until expiration. Yeah, the butterflies are scary in the last day of the month, last day or two, because it has gamma comes into play. So that's the butterfly, balanced butterfly. You can make them at the money, you can make a little bit out of the money, but the positive thing is that it gives you the positive theta. Okay. And the other thing you can do, just keep the same way it is, reset everything back. And you can tilt it. First, we made a 15-point spread, 440, 425, 440, 455, right? You're going to bump it up if you are looking for deltas, because you're paying less, but you don't get much deltas. You need to bump this thing up to get the move up, right? Instead of doing that, those are ideal if you making butterfly at the money, kind of close to it, not out of the money. Out of the money, you take a little more directional bet. What you can do is, instead of making that 15-point wide spread, you make this one at 450. That makes it 10. So 425 to 440 is 15. 440 to 450 is 10. Debit's going to go up because, of course, you're going to pay more. So where we are, 426 and 440. So we need to get to 440, which is this prior high right there. So that's this. You see, now you don't have the upside where you can lose money. This one right there, what you did, you tilt this thing more to the upside. Now it has a bullish tilt to it. Now, if you're going to make this thing into a 5-point wide spread, that's going to tilt it even more. Okay, so the 10, now you bring 103 deltas. You're going to have a negative theta against you. Okay, because you bring in more deltas on a table. Now, if you're gonna bring this thing, if you're gonna push this thing back to 450, the theta is gone, but your delta drops. So you have to play around with these strikes. But the only way you're gonna play around with these strikes when you're gonna have the right wave count. You cannot just pick a random imaginary wave strike prices when it comes to butterflies. Butterflies are very tricky. You gotta know your wave count, and you gotta know like, okay, where I gotta set up those times and stuff to project like, okay, how long expected time for the fib to come to that time, the price and fib, things like this has to come into a play. So butterflies are a little bit more advanced. No one has even heard of these broken butterfly. That's what you call a broken butterfly. You have an even spread from your buy to the sell, that you're selling twice as many in the middle, and then you make in the third one strike lower. So you cannot make it higher. You cannot make a 20 points higher spread here. It has to be either even for the balanced butterfly, or you could have a little bit less. You have a 10 points instead of 5. 5, if you're going to do this, is going to bring a lot more delta. It's going to put you negative now, because now you're more directional. Okay, now because you wanted to go up, but you don't lose that much of a theta because your theta is in your favor quite a bit. Okay, so it all depends on your deltas. So that's how you make a butterflies. Okay, the other one we could do, instead of making this one, you can do the same thing to the downside. You can tilt it. Okay, so basically you just if you want to do the bearish one, now you're gonna have to look down. Now you're like, okay, I want to go to 400. Okay, take a 400 here, buy butterfly. So what will be your first strike? So you can just take 420. You can do 410. So you did 424. So let's analyze this. So now this one is gonna go 400. I'm gonna sell this at this 405. There you go. So now you're coming this way, right? Why is it upside down? Okay, so I'm selling 4, buying the price. Oh, I gotta just pick it up a random 410. Then I'm buying a 4. And I'll open up this. Somebody put some volume right there yesterday, 400 strike. Oh, you gotta, there is some, you can do for a credit as well, but I'd rather just pay for the thing instead of, because you're gonna do anything for a credit, you're receiving the credit up front. But you gotta have to have the margin. So this is 400. Here. So now it has a downside slope. Okay. Compared to this one as an upside slope. So it has more tilt to the upside. So you can just do the same thing. Now it has a downside tilt. So you can just do the same number of contracts here, adjust your delta along with your theta. Now you're taking a bearish belt, so bearish bet. You see, you can you can play around. Butterfly has a lot of flexibility. Okay. And you don't, I mean, if the beauty of the butterfly is this, that if the stock pukes, right, you make like 1,398 and your downside is capped at $2,520. That's the most you can make until expiration. If the price just goes down and it just stays down until expiration, that's your max profit. So you can just each day you just collect time decay and boom, you're done. You see, that's your max payout. Now watch this. Now if the price comes down here and then it's time to reverse right back inside the tent right there. Right there. Between here and here. That's right there. Because you're selling that 395 right there. Okay. Watch this. Each day. Each day. Now you can make $7,400 by the time these options can expire. Versus 45.20 in expiration if you max out that spread to the downside. But you have to wait till the end. And you don't even have to close the trade. If you have a trade that goes like this on a butterfly, just let it work. Just let it expire on Friday. You don't have to worry about assignment and all that nonsense. It's not going to happen. Because you're long 20 and you're short 20. It will cancel each other out. There's no point for you to close it. I mean, how much does it cost me? $26 commission? No, let them take care of it. You just pay a one-side commission. They cover the half when they're going to close the trade for you. Butterfly has a very good flexibility, but I don't want you to start throwing risk on Monday thinking like, yeah, this is the easiest way to trade. No, you need to have a right wave count. Then you structure a butterfly and based on that. But the point is, this is the cheapest way to trade options. You know, butterfly, you can move them around, but you need a good wave count with the right FIB prices that you could think like, okay, either the price is going to stay here for the next 2 weeks or week or two, that I should make a neutral butterfly, or if I'm looking for a directional move, I can open up a butterfly which I can have a more bullish tilt to it, which has more deltas, then I can play the expected move to the upside. So you can there's many ways you can do that. Now, if you wanted to, some of you wants to trade options. Options are really simple, just like buying stocks. This is an ES mini. Okay. So ES mini, you go to trade. Okay. And you look at the option right there. It's right there on the top. So the ES stock is active. So you have 57.95. 57.95 is your last price. It was changed based on Friday. So your bid is this, ask is this. So you just buy it. You have 76 days until for this option. Nobody's holding options for that long anyways. So you have 73 days. So you bullish, you buying it ask one time, it pops up like this with one contract, just like buying a shares. So it's future. You just buy the mid price, which is whatever the mid price is. It's $1 move, 1 point move is $5. So you analyze this trade right there. So now that's your spot price. You have one contract, it costs you $5. Now you go to my chart that I post every single day. What is the here? This is a new one. Okay. What's the plan? The plan is that we break 5804.75. We get to 5821. Okay. Our downside trigger is 5741, and we get down to 5723 and 5701. So these are all the fib levels that I run from different swings. Okay, so that's the plan. 5804. Now let's say you take a position for 57.95. You enter in, it's like, okay, I'm bullish. I think the market is going to dip right back up. Okay, so you just analyze that trade. Now every single point moves, you make $5 on one contract. Right there. See, $5. You have 5 delta. You have no gamma, no theta, no vega. So you have all the time in the world to sit on what you paid for it, and you just play a directional move either to the upside or the downside. $5,
So
one
can
contract.
can you step back? What is the benefit of trading future rather than options?
the
I see
same
that
thing.
I see there's no gamma and theta, only delta, but yeah, it's a basic question. Why do you want to trade the future rather than
People
know,
trade
opt for
futures
option?
because it has no theta, vega, and gamma. Okay, it
Yeah,
has
but
no
same for the stock, right? Same
Same for
for
the
the
stock,
stock.
correct. But the stock but this is margin. It's gonna cost you $2,072 right there. The buying effect power. That's why they use it. Okay, to trade futures. Well, you gotta have to have your account approved for future trading as well. Okay, so if you do the minis, these are the minis are $5. The standards are $25. So the difference between the future price, you take a 57.95, the spot price is 57.51. That's roughly what? 57.95 minus 57.51. So you have a $44 wide spread. So the future market is right now 44 points ahead of a spot cash market. Okay. So the price is going to work the same way. Okay. But you just have the spread of a 44 points, but it's going to work all night. It only closes from 4 my time, 4 o'clock until 5 o'clock for 1 hour. Then it opens up and it stays open for the entire night until the whole session comes in, the New York session opens and this and that. So it works 23/5, like 23 hours basically from Monday through Friday without with 1 day off. 1 hour off, sorry. So futures future market doesn't have that much liquidity. Okay. That is a very, so that's why all of the entire future market doesn't have much liquidity. It does. I mean, it moves the price, but on the normal basis, it has a lot less liquidity and volume compared to the daily, when the session opens. A lot of people benefit trading futures is because all you're doing is simply playing one level to another level. Okay, it's just it is the most easiest directional bet that you can make by trading a future. You wanna take a $10 delta bet to the upside, do 2 contract. Want to do 3, 15 contract. You just adjust how much you're willing to lose per point. That's 10 points. So from 57.95, you drop 50 points, 57.50, down $452. You're not losing any time. You're not losing anything. You're just down 452 now, and because this $10 per point. You go up to 58.50, You made $547. So if the target right there is 58.21, you enter the trade. That's your target. You set up a 58. Well, I trade futures on my own. Not a lot. I mean, I used to be in a lot of futures, but I don't want to be in a market all the time. Just a lot of time I just want to puke looking at them. I just
So
I
when
take
is
I
when
take
is a good
bets
time to trade future versus spot?
anytime you can do it. Definitely doesn't make.
Yeah, for example, like, future, you can, buy and sell pre-market, right? Because the option market doesn't open until 9:30.
Correct.
But, when you see the future moving up, like yesterday before the job data
Yeah.
came,
Yeah,
you can take
that's
a profit before
yes,
the actual spot market, how it reacts, right?
correct. You can just trade futures into the job report or any data. You're gonna have the initial move ahead of time before the market even opens. It's a risk that you're willing to take. If I give you a chart at the close, okay, this is a chart right there that I just made. All right, this is good for Monday close. I don't have to do anything. So Sunday the market is gonna open. You have the chart in front of you. Now, what are you looking for? You need to break 5804. Okay, 5804. So if you break 5804, your first bet would be at what? Target would be at 5821. You don't know where the price is going to go. Nobody knows that. But what I lay out every day works pretty damn good. You break this, you get here. And that thing can crack down here. So, but the thing is this, that we have quite a bit of pocket right there between from 57.41 to 57.95. That's quite a bit of move. So it's not an ideal to get yourself play the upside when you have quite a bit of room to the downside as well, where you're gonna be kind of wrong, you know. So yeah, I mean, like yesterday, the futures was right here. This was a job report when it pops. So if you buy one contract, worst case, for $5. So for 57.65, you catch a move to 5,800. Why is it bad? You made like what? 45 points times 5. That's a $225 within a couple minutes. Well, yeah, of course it can go against you as well, but you can put a stop loss on it. You just go right there, right click. Oh, the trade is not there. This way, not gonna let you put a stop loss. You can just, once you have an open trade here, right click on it, and then you can just go on the side and put a stop loss. Just set up a price, put a price in there. That's my stop. But future market, you have to use stops because this thing can drain your account if you don't have stops. If the kind of like you're talking like market kind of crash on you. So if you had 10 points here, and if ES drops this, yeah, you got now like $3,000. I mean, you want to leave the stop, you see, and come down as much as you can. When you when you pay debit for it, that's the only money that's how much you can only lose. It's the debit that you pay. So it's a little bit risky, but it has big potential. I trade options, I mean, whenever I feel like it, but I'm not in it all the time. Like if I see a news or something, I thought I catch a pop, sometimes I'll just trade like 50, 15, 20 deltas, make like $500-600 on a pop. I'm out. You make $400 a day, that's 100 grand a year. Do the math. but it doesn't mean you need to trade 24/7. You gotta have to have a plan. Okay. You cannot just blindly trade. You need good levels, or you need good content. So like, hey, you know what? This looks good. Let's bet on this. You know, you're gonna have to have that confidence. You can't just blindly trade. Oh, because of the moving average and because of this. Those are just blind guesses. That's why I said I have system. I have RRGs. I have go no go signals. Here. What happened to this? Right. You know, I have a lot of things in my hand. I have wave counts, I have GAN swings, I have go no go signals, I have RRG, I have a lot of experience. So yeah, it takes time, you know. I mean, I'm always looking to try to see which one makes sense, you know, but you can't just like, not every signal is gonna be the best one, but there are good ones that I mean, look at this one. Beautiful. Oh, because I changed. Yeah. What this stock is, look at this. But the point is not like you cannot predict this or will know that this is gonna go this much, you know? But the point is like, if you buy something on the based of this weekly bar, and if you just put your stop loss right there, is it a good trade or good bet to make? Just think for a second. Here's an example. Here's the weekly go signal triggered here, right? It's a weekly bar. Next weekly bar came, then look how close it came. So if you enter a trade anywhere, so that's the high of that. That was the low. And here you put a stop loss right there. It doesn't matter where you enter the trade. You want to go and crack above 435. And that's the explosion move that you got after the fact. Is it a good bet to make? Put a stop loss right there on the bottom. The signal goes against you. Okay, fine. Well, you're wrong. Signal sucks. But these, but sometimes they benefit you and sometimes they're going to come and bite you. So you got to be, so if I take this and just fully rely on this thing, yeah, I don't know what exact result that I'm going to get out of it. But if I'm going to mix them up with what I just showed you after 3, 4, 5 different things, do you think the odds are much better or just over a one single lousy signal? You have to look at this way. That what improves my trading and investing over all these years, that I've learned to think like I just cannot rely on one single thing. It's very hard to risk that way. It's the same thing I just showed you on S&P. You make a wave count on S&P 500. Okay. But what about NDX? And you have to look at everything else. That's the only way you're going to be able to analyze the market. So if you want to trade, so that's ES. So the ES is 5 points. The standard one is $25. So you really don't even have to uh, trade the standard one. You can just trade the mini one. You have to trade 500 if you want to go 25 points per point. Okay. If you're gonna trade I don't have a standard one here. If you're gonna trade the standard one, the ES, that's 25 for one contract. Okay. This one. You put a ticker here /ES on this one. 76 days out active. Hit ask. Go to the mid. Right click. Analyze. 50. Sorry, I don't remember a long time. 50 for one contract per point. That's what most guys like to trade. So if the stock from here, we go to, it used to be 25, I'm pretty sure. Oh, I don't have, because I did this thing on the mini, not on standard one. So what was that? 5,800. Sorry, 5805, I believe. 5820. So you go to 5820, you make $1,225. Simple math. It's $50 per point, up and down. But you don't want to leave this one. You can take some serious hits if you don't have a stop loss on this one. So I highly suggest you to just stick with the mini ones. So the other ones you can trade. Well, I'm not gonna. I'd suggest you, unless you have a huge. You can trade Bitcoin futures. Right there, same concept. Click right there. Ask, bid. It has 20 days out. You can buy a little bit more time, but this is insane. But if you have a pretty big chunk of an account, and if you want to trade Bitcoin, you can. So it's the same concept here. You hit buy, one contract, October 24. That's the spot price. Slide the sucker here and you go to analyze. Okay. So you reset everything. Oh no, because I gotta do. Okay. The regular one. Now you have Bitcoin. Okay. So each Bitcoin is a bunch of is five points, $5 per point. But the Bitcoin moves insane. So the 1 point of Bitcoin is nothing. You're talking 62,721 is $5. So if you're gonna go to the chart, this Bitcoin at your levels. So either if you have a big chunk of an account, and if you're willing to handle Bitcoin, you can trade futures as well, mini. So the upside breakout is 6,300. So from 6,320 to 6,385. Okay. So you are at zero now. So what are we at? 6,385. That's the breakout. So 63. God, what, my brain is not working. 63,085. 63,085. You made $1,825 per point for $5. You can just close the trade if that's the breakout that you're looking for. You can make some serious, insane money on a Bitcoin futures if you can catch 1,000-point move or a $1,500 point. And then futures moves. That's what, like yesterday, you see, 1425. A 1425 from the open price, and if you can, because you have no theta, gamma, anything, you catch that, $5,000 or so. So what's the spot? So let's say you do 62,720 plus 1425 move. So that gives you a price of 64,145. Like $7,000. It's a $7,000 move. Bitcoin on a one lousy contract. Bitcoin future pays insane. I do trade them. Don't get me wrong. I mean, I have a nice size account, and I'm okay. I'm comfortable trading that. So I do swing sometime. I don't stay in for too long. It's crazy. It goes up $2-3 down, and But the best part about Bitcoin is it works really good with fibs and with levels, though. I know how to run these prints. And these prints hits to the penny. I can assure you that. Bitcoin futures definitely, you have no time decay, no theta, nothing. Just you carry in a $5 move per point. But Bitcoin moves insane. I mean, if it goes down to 61, now you're down 8 grand. Can you handle that? Ask yourself that question. You can just put a stop loss somewhere. Say like, hey, if I'm wrong, I'd be willing to lose $2,800. I mean, you can double it. There you go. Catch a double. That's 14 grand for a $450 move that I just did. Here. Yeah, Bitcoin is, you can trade futures as well, but I will not recommend you to mess around Bitcoin if you have a $150,000 account. You can swing something small, but you gotta use a damn tight stop loss. You know, you need a pretty big size account to comfortably trade this because it moves. What is one point? This. What is this for future, for Bitcoin especially? Nothing. You know, it moves like this. I mean, it can open 400 points, boom, on Sunday. Boom. I mean, if you had a trade open at the close, and if you got a pop, I've had few that I gamble like over the weekend, and there's some time that you open lower, you know, and then you just have to either wait it out to see if you didn't take out the downside trigger, you know, the level here, and then the price can climb right back up. But the point is that the Bitcoin works really good with these levels. They just fucking hit them right on the penny. That's it. You got Bitcoin, you got regular futures, you got a butterfly idea. Diagonals we will do later. You can make the same way. My favorites are diagonals, to be honest. I think is the best way to trade options. It's just simply diagonal, not even a spreads. Do 76 like a Microsoft. Like I want to take a diagonal, you can do a 420, right click, buy diagonal. 75 cents. That's adjusted. So you're right here. So now if you wanted to tilt this one, you can do 465. You can do 450. Obviously, you're gonna pay more. But the only thing is this, that it will cost more in premium, but it doesn't give you enough delta unless you bump the trade up. But the advantage of this is this, that like you see, I make a 430, 434.40. That's a $10 widespread diagonal, right? So you're buying the 17 January and then you selling the. So you basically diagonals are you buying a long dated call and you selling a short dated call against it. Okay, it's called a diagonal. When you make a calendar spread at 420 is going to be an even strike. Back to the calendar. Right there. See, so you buy a long dated call, you sell the long dated call, but it's going to be an even strike. 420, 420. So you cannot move this one. It stays like this. It's very similar to a butterfly. You just basically need to stay in this tent because you're going to bump it up to 10. So that you're always going to be less. So you less delta, positive theta. So each day, passage of time. Okay, so because you're long delta as well, but your time is in your favor, it goes up and you collect time decay every single day and you just close it here. You know, as long as you are slightly positive, a little bit less negative delta, you can just close the trade. Every day you collect it for a couple days. People goes out for like month and a half, and then they collect theta for like 15, 16 days and just close the trade. They put another one. So you can make them as they call income fly. They call covered as a poor man strategy, poor call strategy. Butterfly, they call them as an income strategy, income fly. It pays you to hold premiums. So you can do it by diagonal, or you can just do it by butterfly. But you have to know the wave card. You need to know where you are. You can't just structure a trade like this. I like diagonals. Diagonals has more, you can make it same way like a calendar, okay? But you can move them around. Like you can tilt it more. You can bring a little bit down here. Like you see, like what I did here, I did a 430, 440. So I'm buying a 430 call. I'm selling a 440 against it. So 683. Now I have a bit of a bullish tilt to it, right? Because it has bullish tilt, like like the butterfly. Butterfly has 3 strikes. Diagonal is only 2. It's much easier. Yeah, and then if I'm gonna go to 100 deltas, 100 deltas right there. You see the premium? I'm gonna pay heavy premium. But that's not the point. The point is the delta or point. So if I go down this, it doesn't cost me anything per day to go down. Well, yeah, the price went against me. I get that. I understand the price. I supposed to go up and now the price went against me. But it's not costing me that 30, 40, 50 bucks per day. I'm positive theta on a diagonal on a good stock that it has a potential that it could pop. So if you're down 4 points, you just down what the delta is. So if this thing comes down to all the way down to $1,000, now you just almost break even on theta. You see, the theta really doesn't kick in at all on a diagonals. That's what I love. Diagonal is my favorite. Butterflies and diagonals are my favorite strategy, and I want to bring you guys to it. But some of you cannot hold, and I don't have margin of. I don't know what to do, what to tell you. You have to call your broker. There is potential that you can make money. I trade them, but there's no. I mean, I'm gonna the other day or something, I open up a trade and somebody said like, well, can we do something? The guy, somebody's afraid to pay like $6.50 premium. Oh, did you analyze the trade? You paying $700 per one contract. Did you even look at the trade? What is it costing you to pay for the premium? Or are you just guessing? Oh no, I don't want to pay for this. Why are you guessing? You haven't even looked at the trade. So if I structure a trade, you think I don't know what I'm doing? Or it's just like, are you just gonna sit and guess me what I do? I mean, it's just put the damn trade on and we can adjust it. We'll see how it works. If you make a spread, it has negative theta and it depends. Yeah, if your cost is going to be half, then you're going to pay big chunk of contracts. You get to do 8, close to like 90, close to $100. 100 is a good delta, of course it is. Or point, the positive theta. I mean, why would nobody would make a bet like this? I have my target to the upside of 420. Let's suppose you hit your 420 target. That's $432 without paying any time for it. Why wouldn't you trade this? And if the price goes against you, does it hurt you to hold premium? No. There's a lot of ways you can trade options. It's just this bullshit that people are sitting and just wasting their life's time every single day. Oh, Tesla at 420. Okay, 420, 440, $10. Right click, analyze. Let's say I'm just gonna buy $10 one contract. Gives me $34 here. Bump it up to 2, at least 70 deltas. Here it goes. Cost you $25 per day. Every single day. You pay $2 grand. Okay. theta's going away. Yeah, you can make the move if the stock pops. There's no doubt. What makes you think, or you're so sure that the stock is going to pop the next day? You don't know that. What if it goes down against you? Some news breaks out or something, whatever. Now you're down 889 with this. At least you go down on a diagonal, okay? 80, 87, at least you're not going to get killed with time on a recovery, whatever the odds are. Worst case, it depends where the stock goes, where we find the potential support. I mean, you can, if you can reduce half the size on this one, you have to close the entire position. If you have 40 days or 50 days out on time, you're okay. It's a Microsoft stock, for God's sake. I mean, you know how long you think it's going to stay down? Half the year? You know, it's just like you can make a butterfly to the downside. Stock goes down to 450 instead of like going out there, leave this one 76 days out. So like, okay, you know what? Stock went down to 400 bucks, go to 13 days, make a balanced butterfly. You make it like in the money. 400, what's the implied mood? 15, make it 385. You have 385, 400, and make 500, 405. Cost you $9.20. Now you just analyze the butterfly. So now you're down here. So can you collect it? So the time that you're losing to the downside, you make a different strategy to see if you can bring yourself to bring some time back. Your move stays the way they are, but you just have to you just have to bring the time positive. It has no theta, no delta. So the 385, 400, 405, this like if this thing closes, if this tongue closes here, yes, you negative here if the price pushes here, but you're gonna turn positive really fast because you're coming down. There you go. I mean, there's no guarantee that thing is gonna close here, but you can pick if anywhere it closes, all profit because you made the butterfly to the downside. It should collect the time decay, you know? So you can so the $900 that you're down, now it cuts your loss down another 300 bucks or so. Now you're down like $500. Is it better to be down 500 versus 900? You know, there's a lot of ways that you could do that, but I understand like throwing risk is never us because if the position is going against you, if the damage is getting done, you just take your loss. That's it. Move on and get yourself another one. Don't throw risk on a position that is going against you. It's gonna destroy you mentally and financially. You're wrong. You're wrong. There's nothing wrong with that. We'll find another trade. What's the end of the world? Are we gonna down the next 10 times as well? No. You know, we'll find something. This Microsoft is just kind of looking a little scary to me, to be honest. I don't know if this thing can freaking extend to the downside. You see right there, this thing right there. Really want to stay above this number right there. That's the high, low, higher, low, higher, high. That's higher, low right there. It needs to stay above this print. That would bring this leg down, which is okay. Yeah, right there. It looks kind of little because you have the initial leg lower. I mean, I don't know. Kind of hard to see compared to the other stocks. They're just like ripping to the upside. Meta, crazy. Apple is good. You know, I would I bought a share just because of some couple of you guys. I wouldn't buy this much anyways. I've had Apple shares for a long time. That was a good entry. Look at this. I bought them back in March. That was the low, 164. Picked up 65 shares, cost me 11 grand. 171.45 is the entry right at that bar right there. And I remember that I got the signal right there when I bought them. Look at this. Move. Gave a chunk back. Came back up. This just looks like a triangle as well. This one right there. Just like NVIDIA. Look at this. A, B, C, D, E, whatever. Very similar to NVIDIA. Apple slow down phones. Yeah. It's all those cheap stories somebody else. Apple doesn't even need a market. They just buy their they just buy their own stock. They don't need market help. They're the biggest buyers on their own stock. They can buy till the rest of their life. They're never gonna run out of cash anyways. You know, they have that much cash. They don't rely on a market. Remember, it was like before. Apple goes down. Market is gonna puke this and this. They're still trying to do that. As a matter of fact, if you notice that, oh, iPhone sales are down. The iPhone just came out 2 weeks ago. How do you know the sales are down in 2 weeks? How do you do log scale? Log scale, you gotta go here on the settings, chart settings, and then you go to this price axis. Right there, the check mark, this log scale. Okay. So you go to settings, price axis, and then check mark this log scale. So if you wanna take a snapshot, because I've had this thing customized from the computer that I just purchased. It's very fast, my Thinkorswim. Well, I don't know what the heck they did. They customize your Thinkorswim software. So it came when I turned the PC. They asked me what trading platform did I use. I told them Thinkorswim and Motivate and the Optima. He's like, Thinkorswim. He's like, we have settings. He's like, we will install it for you. And then he says, like, it will have the installed Thinkorswim. I was like, okay. So I got them and I turned them back on, and that thing can move like crazy, never freezes, nothing. I don't know what they have their settings. I have a computer I bought from Trading Computers recently. Very nice computer, love it. So you could do, I have some, you do OHLC here on Snap Drawing Tools. It will magnet your fibs to the high and low. Doesn't move. So you could do those price axis. You can do a log scale. I don't do auto. Manual is fine. Time scale. I got rid of all these lines. I don't have none of these. I just try to keep them clean. Favorite time. I have few. I have max, 1 year, daily. Appearance just changed because I had everything black before. So got candle. We can do a bar. We can do a candle. Doji is this. I can make this one yellow. It's a doji candle. Border up, border down, doji, cross, present, background. This equities, I don't have extended features on, but you can do in options. Equities, volume, future, forex. That's it. I bought them from Trading Computers. Let me Let's see. This is the PC that I have. This one. This is a company that makes PCs for trading. It says you see a trading applying to use Thinkorswim or may want to use in future. That's included. So they just, it has a CPU processor, Intel i9 10850, 10th generation, 10 core 3. I don't even know what the fuck is I don't know this. I'm not a very tech guy. I can tell you that. I know how to draw charts. I don't know much. 32 GB memory. A very beautiful glass. The casing that I got has those fans running inside, those lights. Windows 10 professional. Whatever cables and stuff. Hard drive 2 for the backup. Something like this. My brother kind of helped me picked up all that stuff. So I think it's pretty good. It's pretty fast. CPU is good. i9. It cost me like $27.93. Write off for me. I'll write it off another year. It's a 100% write off computer, and I'll just do the LLC. I have registered LLC, so I can just write the whole thing off. What is this one was gonna this one. Yeah, tradingcomputers.com. That's the one I have. That's the one I bought. They make very nice computers. Beautiful computers they make. But they're not, I mean, you can use them for gaming purposes, but they only make it for this Todd Gordon, right? There's a friend of mine. He uses the same one from them. They just make trading computers. One of these. I was gonna go with this one first. Well, and I was like, I don't know if I really need that. Then I called them and they asked me like, hey, what do you run? This and that. And I would told them, I was like, hey, this is what I run. And like, I need a very fast computer. It's like, okay, no problem. I had my other one through them before. So it's P3237. That's tradingcomputers.com. It's a guy Phil over there. I mean, he's a very, very nice guy. That's the one I got right there. P52 GT. Then I changed the casing. And this one I think I did 32. No. Where did that went? It changed some of those things. Yeah, something that probably changed the casing. It's a good. They make laptops as well, very fast laptops. If you want to use for trading, $1,500. It's 530. They make those 3 monitor setups and 4 and 6, 8. So crazy on that one. I have 4. And you can just buy the whole bundle. That's his setup. G37. You know, there's some of these people set them their pictures for a gallery. I mean, system is a system. It's just, I don't never have any problem. I have the old one still sitting in my closet. Some very good PCs they make. never have any issues, no virus, and excellent support. Call them right away. They're gonna jump on them and remote access, figure out everything, and boom, done. Yeah, it's lifetime support. You're gonna, oh, I mean, you need a good computer to trade. I had the old one, but Optima takes too much of memory. Very, very big software. This is beautiful. Very nice. Yeah, I oh well. You cannot be a carpenter if you don't have the right tools. The same thing. You cannot be a mechanic if you don't have the right tool. You're gonna be a shitty mechanic if you don't have if you don't have the tool. How are you gonna fix it? All right, I gotta go.
Oh, Mo, before you go, can you go over the Tesla October 11th butterfly that you put out yesterday?
I gotta.
How it works?
No, you just gotta have to back it up. I did the pictures there as well.
Yeah, but I didn't
Mm.
quite understand. Because, two strikes are already in the money and you
Yeah,
said that
I'm just looking for
that is
price.
a trade that you assume that, Tesla is going to go sideways next week.
No, I'm gonna just well, I didn't realize that thing is gonna be on a taxi event, but we'll see. We're gonna wait till like the day or two. If it's not, just close it.
Yeah, October 10th is
This one, the
taxi.
upside, and I only did one. Just I didn't do anything. Just yesterday, I couldn't really find much. I just did this one. Upside here, okay, is capped at $15 until next Friday expiration. That's the most you can make if the price exploded to the upside. That doesn't, I can make another trade. If this price moves back down and stays under this mark, it's all profit. And if we can try to close this thing at 240, for you make like over little over $1,000. So any price from here to here to the downside is all money until expiration. If we're gonna start cracking this 230, okay, that 230 price is we're gonna start losing money. Okay, so there's a pretty big window from 250. We have a price down to 230. As long as we stay here for the whole week, we make money. If we rip higher, the max upside is $15. If price reverse back down Thursday or Friday, closer and closer we get to the expiration, we make money. So it's all money here between the tent. As long as we're inside the tent, and we can just, this line right there is the price line. And this thing can close here and we're done. That's the trade I just did. The reason why I'm doing this is, I mean, we can just rip higher as well, which is fine. Our upside is capped. We're not going to lose anything. It doesn't, but it's just a bit of a more neutral strategy is to see if Tesla will go sideways. I was under the impression that Tesla put up this huge move down, and I start looking at the the earnings. The earnings are following week, and I was like, okay. I was like, Tesla ended the week with an outside bar, weekly bar. I was like, a lot of time when you end up with the out. I think, let me see. Yeah, it's an outside bar. Okay. So you see it's a blue bar. So a lot of time when you close with the blue bar, a lot, I mean, you can, it can go up, but the most of the time the week goes in the inside week, you know. But I wasn't aware of that taxi event. I thought taxi event is going to be later, but that's fine. Doesn't matter. It's I mean, I did just only one. But if we do break, if this price does break 264, yeah, it's going to open the upside. And if we're going to break 237.81, and then it's going to put a lower weekly bar. That was the low for the week. That's the high for the week of 264.86. So it engulfs based on the previous bar right there, you see. So now it's goes up and down with new high and lows. So I structured a butterfly around here. I thought like, okay, I wanted to do 250. Remember we did a week before, but we closed at 260. This one, that was last week. I centered that one at 250, but we closed at 260. This yesterday we closed at 250. I was like, what the hell? I would have if I would have made a 2 weeks butterfly at 250, that would be just a monster perfect payout. You know, with the right of the pin of the butterfly right there, 250. I was just kind of weak off. I kind of believe think like Tesla just kind of go sideways for some time. That's what I think. If we don't go sideways, then this is a right wave count. Basically, you have 1, 2, 1, 2, up in 3, down in 4, and that's your fifth wave to the upside toward this third wave. We'll have 5 completed waves in 3. Then you come back down in 4, then up in 5. So the wave count is fine, but it's just a matter of like if this fourth is going to take a pause here, okay, and see that's your 251. That's your resistance right there, and then see if it can go sideways. But it doesn't look like now because the taxi event is going to be such a big, huge deal for that. So I don't know how stock will respond. But this one, the butterfly strategy, according to the wave count, works really good. Why is that? Because if this wave count is going to be wrong, it's going to be wrong below 235, correct? That's the invalidation. So at 235, and my downside is at 230. So if the price will come down at 235, okay, and then I am going to actually start losing money below 230. Okay. So I structured it that way. So I don't have much risk to the downside because I'm all positive theta and I'm going to be okay. So it's just a matter of like, if we close that way, but I don't know how the taxi event is going to go. I thought that we will just go take a pause, wait for the earnings, and then the earning comes into play and I can just chew time for next week. But now we have the event coming on Thursday. And so I totally forgot about that one. Then somebody told me that it's going to be on Thursday. I was like, okay, that's fine. So that's this. But you don't have to sit and fight if you wants to be bullish on that trade because you already long to contract. Okay. So you already have an open trade. So for the open trade that you can just close the short calls. That's the one that you were short. You can just close those ones. Okay. So that would so you're short 240. That's the body of the butterfly. You are long 220 calls. That's way deep in the money. That's why it costs $30.85 per contract. Okay. And then you're long 250, which is you almost right at the money. So you have one contract of 250 at $10.20 for next week. If you wants to go bullish and think that Tesla will pop, you can leave this one as is, 250. What you need to do, you need to close the 240 and then you close the 220. But that's pretty heavy premium for one single call because it's way deep in the money. Okay. If you have the stomach to hold it, that is going to be a $4,000 trade for you because you have a $3,000 worth of a premium that you paid here and you have a $10 here. That's what? $4,000, right? And then you have $3,000 right here in the middle. You know how butterfly cost works? Let me explain it to you. You are long 220 call and you paid $30.80 for it. $3,085, correct? Now you are short $15.60 to 40 calls. Okay, so you're 15 times 60. And then you're long at 10.20. Now you add 1285. You minus. Okay, so you add this twice. So it's going to be what? Times 2. Why? Because you have 2 contracts here instead of 1. This is 1, this is 1, this is 2. So you take 15.60 times 2. That gives you 31.20. This one, 10.20. So how do you get your net cost out? What you paid for it. So you take 30.85 plus 10.20. Okay. 10.85 plus 10.20 is 41.05. Now you short 2, remember? You short, not long. This is plus. So you minus this 31.20, 41.05 minus 31.20. That gives you a net cost of $9.85. What do you think I paid for it? $9.85. That's how butterfly cost works. Okay, because you long 2 calls and you short 2 calls. So you add these and you add this. Then you add these 2 and you deduct the -2 out of it, like the way I did right there. That's your net cost. That's going to match with what you paid for it for one contract. So in this case, this is $15. I did it this way, and at least if the stock is going to explode, okay, fine, it exploded. I can find another trade, or I'm going to catch a Tesla and buy a single call. If you think the stock will move based on the wave count straight into this wave 5 in a taxi event, you have this call right there. What you have to do is you have to close this one first and this one after that. Okay, you have to sell the short. You have to buy back the short and you sell this one. Then you're going to be long only one call for next Friday of 250. It's going to have a crazy data on it because you're only 5 days apart, but now you need to move. You know, so this can be played. So it's the same thing on diagonals you do. Okay. Diagonals, one side you're losing, one side you're making. Okay. If you hold your long call and you sell and you buy back your short call because you short that call, right? Because you want the thing to decay faster, you just close that one because price pushed up. So that short, the one you're losing money on it. You close that one. So when you close that one, oh yeah, you guys are gonna keep me here all day. That's what I'm saying. These spreads have a lot of flexibility. You can play around with these strike prices. 104. You take, let's say, 250. Do a diagonal. What? So you want to go directional 250, 260, right? It's not gonna break that thing down because I have an open trade. You know what? Let me do it individually. So 21 February 255. So if I do a 255 and then selling one, oops, you can custom the order as well. You can do sell here, analyze. Okay, now you can match it. So you have 21 February. Sorry, you can do it. Killing me. You can do that. So you buy one here and you sell something here. See, there's a diagonal. You can do custom. Analyze this, get out of this, now match it. 21 February by 21 February by 255. And then second one is 17. I'm just going to show you a different way. Like it's the same order. It's not going to show me now because the trade is not open. So you have 17 January 25, 260. So you can custom that order for now. So he's going to show you a credit. That's a problem, but that is fine. You know what? And DC is not going to work this way because I got to make all the single way is the best way to do it. And then you can just do this. Now you can match it. It's a single option, single trade. You take 21 February. $255. Just manually adjust all these entries. And the second is 17 January of 260. Okay. Now the point is, oh, you selling this one. Okay. So you selling this one. So you long February 25, 21st February 25. I'm just giving you an example of 255 call, right? And you're short a month before 260 calls. So this -1. So I just did a single buy and sell here. Okay. So that gives you a 10 deltas, right? Slightly negative theta. So when you're going to make a diagonal, which is the same thing, you see, 942 and 1, it's the same thing. You just break that thing down into an individual 2 separate order instead of making a 1 order. Okay. But the point is on this one that you short, right? If price goes up, okay, this one is going to go against you because you short those calls. So the price goes up, you lose money. The one you're long, Okay, you're gonna make money on them. Why this thing is all over the place? Okay, so you make money on those ones to the upside. So if the price, if you do a diagonal and one side rips, you can quickly close the short side and you can just ride those calls to the upside. You know, that's the beauty of a diagonal. I do it a lot of time. I did one on S&P 500. That was a yeah, that was a good one. I was in a diagonal, stayed neutral for some time. For a couple days passed by, and then S&P started to move up higher. Just closed that thing. S&P popped another 30 points. I mean, it was a heavy risk because I'm 10 long contracts of those. But then you can catch 20, 25 points. You know, pretty nice payout. You know, but you gotta watch and figure out that pop that thing happened. You know. So diagonals are good. There's a lot of flexibility on them. The calendars are good, but we will do those, you know, but I don't think it's right. We see this thing is too elevated. Over the weekend, some of their premiums don't line up right. You see too much elevation here. Yeah, Apple is. If you want to do leaps and stuff, you can do exactly the same way. Okay. You want to buy a single leap, further out, way on deep on have like money or whatever, there you can go to 258 days. You can do it. 300 is way too 250, whatever. Try at least 30 delta is good. 260 by diagonal. Okay. So you can tilt this one. It just gives you the tilt. It depends how much contracts you want to hold. You can even tilt a little bit more. Like 275. Have that. Apple something bids are not right. I don't like this elevation right there. Pick a different from Netflix. See, you want to buy Netflix, expensive, right? Just do a diagonal. You see, some of these are like this. It's $22 because it's a very high ticket item, but you can go slightly more out of the money. You can do 850, 900. Yeah, but how much you think your ad the money is gonna cost you? Almost 10 grand. But with diagonal, you paying $2,200, but it only gives you 10 deltas. It's okay. Like 10 Netflix moves pretty good as well. So so the point here is like if you have enough money in your account, you can always do 50 delta trade. You're out 258 days until next year, June, summer. It's just the the price can move lower and stuff, but yeah, it's all based on how much delta that you're carrying, but you don't have much data against you. Even the fact that you have the leap. Now, if you want to buy an 850 call, oh, they don't even have 850. No wonder that thing is all over the place. Okay, now it makes sense. That's what I was saying. This elevation is too much. 860, 900. Okay, good. 860, 900. Now it's good. You see, like, do 3. You can do 2. 20, slightly better, and you can catch a move to the upside. You have a lot of time. You can do multiple trades on different pairs and stuff. Let something work. You know, $600-700 you can make on trade. Why it's a bad trade? Keep moving. You know. But the thing is this: you have a leap. It's not costing you much time, and you're paying a lot less for it, and you buying a high ticket item, the stock. Now, if you want to go buy $860 costs you $4,200 for one contract. How much that thing is gonna cost you? $18 per day. That gives you $35. And here you're paying 2 for the same debit, $860 to buy one single call for one for 35 against 17. So every single day on this leap, okay, is gonna cost you 17, $18. So why wouldn't you do this? Same risk, same upside move for the same reward, but you don't have time against you. Sell. You have to have the mentality, and you have to sell premiums more than you buy premiums. Those are the ones that are making more money in this game. Because a lot of smart ones, they realize these option premiums, they expire worthless anyways. Sell the hell out of it as long as it has a bit of a value left. You know, this value is gonna decay. They have a value for a very short period of time. That's all. Here's your next week chain of Netflix at the money cost 1,000. Set. I bet you by the time this thing is gonna this value right there, it's gonna decay really, really fast. This guy right there pumping up 750. Imagine, okay, fine. Buy $1.28 contracts. And here. So you got this. Because you want to buy cheap premiums. Get it up to $10.42 per piece. Now sit and enjoy. So your 122 delta long, $400 negative theta per day. Stock doesn't move for 2 days, you toast. 1, 2, there you go. Now you need to move 738 just to break even. Just to break even for the 2 days of that theta that you just lost. This is what every one of them out there are fighting. Time. Size up the trade. Risk like an idiot. And hope that thing is going to go. What is your odds, you know? I bet you most of the people out there who's losing money is not the direction of the stock that are there, but they're the time they're eating them every single day. Okay, I gotta go. Goodbye. Have a nice weekend, and I will talk to you over the weekend.
Thank you, Mo.
You're welcome.